All right. So for today's session, our main focus was meant to be this. PV is short for present value. It's a relatively straightforward concept. So the idea is you're trying to get the current value of some future stream of income. The idea is there's something called the time value of money. Okay, the time value of money means like a shilling today, if you invest it, might be worth more in the future. Okay, if you invest it. If you don't invest it, it might be worth less in the future. So the value of money changes with time. So that is what we're calling the time value of money. So we're saying the present value is the current value of an expected future stream of cash flow. It is based on the concept of the time value of money. So the present value is based on the concept that a particular sum of money today is likely to be worth more than the same sum in future because it can be invested and earn a return in the meantime. So the context here is the money is being invested somewhere and it is earning some interest. It is not just sitting somewhere. And of course, if it just sits somewhere, it will lose value. Due to different factors, inflation and so forth. Then this present value calculation requires an estimate of a potential rate of return, which is called the discount rate. This is the rate, the approximate rate at which it will increase in value. Okay, so sometimes because we are talking about the future, sometimes this can be estimated. Yeah, it needs to be estimated if it is not when you have not been given a fixed rate. Okay, so you can also calculate what is called the future value. Okay, I think I'm mixing those concepts. With present value, you have some cash in the future. You're investing some money somewhere. You want to get, let's say, $200,000 in future. What is the current value of that 200,000? Okay, so it's a bit of the opposite of what I'd said before. Apologies for that. It is you're looking at a future sum. You're trying to think what is the current value of that money? If it will be 200,000 in 10 years from now, what value is it now, given some discount rate, given some percentage rate at which it increased in value? Okay, while future value, which is what I have here, the future value is you have some sum today, how much will it be in the future? So the future value is relatively straightforward to understand because it's more like what you do when you invest some money and you are getting some, say, for example, some interest every year, whether it is compound or simple interest. Of course, the future value will be greater than the present value. Okay. So if you think about the two concepts, they are opposites of each other. Future value, you are here now, you have some money. Let's say you have 1,000,000 shillings. What will it be 10 years from now at, say, 8% per annum? What will it be? So the future value function allows you to calculate what the value will be in future. The present value function, you take some future sum of money and then try to work out what is its value today, or what must I invest today to arrive at that goal in the future. Let's say I want 3 million in my account at 10 years from now. How much do I need to put in today? Let's say at 6% interest rate. How much do I need to put today to reach that goal? That is present value. Okay, let's jump into an example. So how do we work out future value? We will use, there's an FV function, future value function, but there's a manual way of working it out. If you remember, I don't know if you have done the compound interest formula. You can use a manual way of doing it, but because we are trying to use Excel, we can use the FV function, this one that I've already used here. Let me zoom in a bit so that you can see it. So I have 100,000. I'm investing it for 20 years at the rate of 6% per annum. This is the annual interest rate. Okay, so what will the value of that money be? What I've done here is I've gone 1 year, 2 years, and 3 years, and so forth until 20 years from now. So we want to see how does it change every year. Okay. So for the first year, how do we use these numbers in the FV function? So let me just retype it here so that we can see it. So I have equals FV. Okay. And what are the parameters? If you're doing this in Excel, the nice thing with Excel is it will show you the parameters here. So that in the program I'm using today, Google Sheets, it's not showing me the parameters. But if you look at this, E18 is the interest rate. So the thing that will come first is the rate. Okay, E18. Then if you look at G15, it is the amount that you are investing, right? Then this one is it would be the PMT. Remember we talked about PMT earlier on, like what would be the monthly or annual amount that you invest. But in this case, because we are not investing every year, we are only doing one lump sum amount to start with, then that is what we will be waiting for the next 20 years. So we'll assign that value as 0. Okay, if you have access to a computer somewhere with Excel, please look at this, confirm that that is PMT. Then the last one is the amount that you are investing. So this would be, if you look at Excel, this would be called PV, present value. This is the amount that you're investing now. And you would normally use a negative, like you would make it minus something because it is money going out. Okay, otherwise, if you don't put that minus, you will get a negative answer. Okay, but ideally, because it is money that you are investing, it is, from your perspective, it is money that is going out. That is why we put a negative there, and it gives you a positive answer. So if I invest 100,000 today at 6%, in 1 year, it would be worth 106. In 2 years, it would be worth 112, and so forth. So the idea here is, if you're using Excel, the nice thing when you're using functions is there will be this wizard here guiding you. So you will just need to follow those steps and you will have your answer very quickly. That's why I say these functions are pretty straightforward. So that's future value. You're given some money today. What will it be worth a few years from now? So the question here I was answering was this one. What is the future value of 100,000 shillings 20 years from now, given an annual interest rate of 6%? Okay, that is a straightforward formula. Then let's try and talk about present value. What is the present value of 200,000 10 years from now? Like 200,000, this is the value of the money 10 years from now. So like we are now in what, 2024, 2034. If I have 200,000 in 2034, what is it worth today in today's money? That is what this question is talking about. Okay. Or 3 million 10 years from now, what is it worth in today's money? So the formula is very similar. So again, we have the amount that we need to work with. The years I'm working with is 10, and the rate is 8%. Okay, so this time round, I've kind of moved backwards. I've started with this is the value of the money in future. What is that worth today? If you use the calculation, the PV function, okay, notice again, we start with the rate, right? I'd like, again, like I've said, look this up in Excel. You start with the rate, then go to, so this should be the rate. Then G22 is where the present value should be. No, sorry. G22 is this. It is the period, the payment, that will be the NPER, the payment period. So remember, like when we were calculating IPMT, okay, there is a payment period. If we were talking about 12 months, each of those months was the payment period. Okay, so this is the 10th year. It is what goes here, like which year are you referring to? The G22. Then there will be a zero value here because this will be FV. If you look at the formula in Excel, you will see that this will be FV, then this is the future value. This will be the value we are looking at. Actually, the FV is this one, the one here. Okay. So I would like for you to look it up in Excel. This one I assigned a 0, then I did this as this is a future value. Then again, because I want a positive answer, I'll make this a negative. Then if I press enter, what this 92,000 means is if I invest 92,000 today at 8% per annum, 10 years from now, it will be worth 200,000. Okay. 5 years from now, so I kind of worked it backwards. 5 years from now, so what is changing if you look at this formula compared to that one? I am changing the period. This one remains fixed, the interest rate, but the period is now 5 years. As I go along, you will notice it will keep changing to 4 years and so forth. So if I want to, if I want 200,000 1 year from now, this is what this 1 year means. If I want 200,000 1 year from now, how much do I need to invest at 8%? So I would need 185,000. So it's very close to the goal because the period here is shorter. I would need to invest a larger amount of money for me to reach that goal of 200,000. Right. So that is present value and future value. I will send you this worksheet as well so that you can read through the notes. Okay. And I think what I will do is also this worksheet, I did it in Excel. So what I've noticed is it works the same way in Google Sheets, except that the Excel is a bit more helpful. It will give you the wizard, the hints on what you're supposed to enter in terms of this function, these parameters here. It tells you what they are. It gives you the summary of the function. So that is PV. Let's move on to NPV. It is the net present value. Again, it's even easier to understand than the PV. Okay, it's a much easier calculation. But it is a summary. Let's read what it is. It is the net present value is a difference between the present value of cash inflows and the present value of cash outflows over a period of time. So in other words, you see like this net present, if you are investing some amount of money, I think there's an example we'll do here. So net present value, let's say for year 1, and let's say you're investing this money for 10 years, like we have put here. The net present value, you see this present value changes. Every year there is a different present value. Okay, so the present value in 1 year, it is 185. So if you are thinking of this as an investment, it is a business. So the context here is a bit different. Here you are investing some money. Here it is the returns that money is giving you. So if you look at my example here, But before we jump into the example, let's quickly look at what the theory says here. I think I've talked about future cash flows. These are the expected amounts of money that will come from the investment over time. I think we have done that. Discount rate, it is the rate used to convert future cash flows into their present value. So that is that rate, that the 8% we have looked at. Then present value, we have said it is the current worth of some future cash flow, okay, calculated by applying the discount rate. So I think we have done these ones. So let's go into an example of the net present value and see how that will work. The first example I have here is you have an example, an investment with the following cash flows. Missed an H there, an S. Okay, so in year 0, this is when you invested. This is the amount you put in. It's like the capital you started with. Then every year you expect some amounts to make some amounts of money. And this amount that you put here when you're working out the net present value is the net, like the name suggests. Okay. There is it is a difference between the outflows and the inflows, or income and expenses. So what you get as the net cash or the net income is what you will use here. So when we say cash flow, it is the net amount. Okay. And like I've said, this formula is pretty straightforward. The more important thing is to be able to interpret it correctly. What does this amount, what does this figure mean when you get it? Okay. So how do we use the net present value formula? Again, we'll start with equals to, then NPV. Then when you open the brackets, if you are doing this in Excel, you will notice that it will give you the parameters. It will tell you what arguments you need to put into the brackets for you to get the answer. But in short, you will start with the rate, just like we start on most of the other functions we have dealt with. So the rate for this one is 14%. Okay, 14%, then comma, and then you highlight all the amounts, starting with the capital, the amount you started with. So you start with the 30,000 all the way up to the 5th year, the cash flows for all the 5 years. Okay, so pretty straightforward compared to the other ones. So we will, actually it is the cash flows you will select. So that is 15,000 up to 20,000. So D26 to H26. Then you will add the capital amount, the amount you started with. Okay, so that formula again is, let me type it to avoid confusion, is equal to NPV. Then you start with the rate. You'll be given the rate in the question. Then comma, all the cash flows. You might be presented with a scenario where you need to calculate the net first. Then you will add the starting amount, and that should give you the net present value. Okay. You could, there are scenarios where you will also be asked to calculate the present values first. That means you will need to use the present value formula first. Then you will sum those present values. It should give you this same answer. Right, so that's example 1. Let's try example 2. This one is a bit more detailed. So we have the cash inflow, cash outflow. You first start by working out what the net is. So it's a difference between those two amounts. Amount 1 minus amount 2. Excuse me for a minute. All right, sorry about that. So I was saying, we have the net cash, which is 2,500. It is what I've put here. Okay, so these are the figures we are working with. The discount rate is 10%, and the initial investment is 3,000. So I'm assuming this is dollars we are working with. This one, give it a $sign. So if your cash, net cash is this, so I will put those in year one, it was 2,500. In year two, it was also 2,500. It might not be, this is more like an ideal situation. There might be some years when it will be less, or some years when it will be more. So one of the shortcomings of these functions is that there are certain things that you have to estimate, because these cash flows, we are hoping that it will be that in the future, but we don't know the exact amount. Okay, so it's more based on some estimates. Okay, even this rate of return is a bit of an estimate. So it is if you are asked what are the shortcomings of these functions, is one of the biggest shortcomings is that you have to work with estimates. Okay, so let's work out the NPV for this. These are the cash flows. Like we said, the formula starts with the rate, which we're given 10%, then highlight all the cash flows only, then add the investment, the initial investment. It's as simple as that. Start with the rate, highlight all the cash flows for the 5 years in this case, close the bracket, add the initial investment, and you have your final answer. Okay, so that's the NPV. I had done a manual calculation here, which I don't want to confuse you with, because what you're supposed to be learning is the function. All right, so one last one, it's called the internal rate of return, the IRR. Okay, so reading this definition, the internal rate of return is a metric used in financial analysis to estimate the profitability of some potential investments. Okay, so in this case, we're talking about the net present value. So it's a bigger figure. In this case, we are looking at a percentage. We are comparing what is the estimated percentage rate of return. Okay, you will compare it then with, when you work this out, you compare it with an internal estimate, a different estimate that you will have made. Let's just look at this definition that makes the net present value of all cash flows equal to 0. So the aim of the IRR formula is to make the net present value of cash flows equal to 0. Okay. And so how do we interpret this? Number one, yeah, if the IRR is higher than the required rate of return, the project is likely to be worth pursuing. So it is, since it is expected to generate returns above the cost. Okay. Then if the IRR is lower than the required rate of return, it indicates the project may not be viable. So these interpretations are important. So positive or negative IRR, a positive IRR, internal rate of return, indicates that the investment should generate a return and could potentially add value. So you should go ahead and do the investment. A negative IRR, on the other hand, implies that this investment is expected to lose value, okay, or possibly not cover its cost. So it may not be a profitable venture. So these formulas are used for judging whether an investment is worth doing or not. All right, so limitations. Let's talk about these limitations for a bit. It is IRR assumes that cash flows can be reinvested at the same rate, which is not always realistic. So there's some estimates, there's some assumptions made that the rate will remain the same for these 5 years, for example, right? So, and they're saying another limitation is that projects with non-conventional cash flows can have multiple IRRs, which complicates interpretation. So you might have different cash flows from different angles with depending on the context. You might have them coming from different countries, different businesses, and so forth, right? So it is a useful tool for evaluating investment opportunities, but it should be used alongside other things like the NPV. Okay, but how do we work it out? Again, pretty straightforward formula. So it's actually even easier than the NPV. If you look at this, we will just use we will just literally type equals IRR. That the Excel will pick it as the function. Then what will go inside, the parameters that will go inside will be the values, including the initial investment. So in this case, we are highlighting everything. So if you look at what goes here, it is C28 all the way up to H28. So C28 to H28. Okay, and it returns some percentage. Okay. So you will compare this with what is called the cost of capital or the discount rate that will have been given in a question. The question will have given you a discount rate, but the result of applying the IRR to these numbers will also result in a percentage. You will compare this percentage with the percentage that you'll have been given, the discount rate that you'll have been given. Then if this is higher than the discount rate, then that is an investment worth pursuing. If not, then this applies. If the IRR is lower than the required rate of return, it indicates that the project may not be viable. All right. So that's an interpretation of the IRR. Okay. So what I'd gone ahead and done here is a bit of a summary. Okay, similar thing. So present value here, I used a bit of a manual formula. Okay, or I can use the PV. If you look at these numbers, they are the same. The manual formula is a bit more complicated, so I will not go into that, but let's look at this. So this is the normal PV calculation. So I invest that. These are the cash flows, expected cash flows, and these are the present values. So remember this 1,000, we're estimating to be 1,000 in future. What is the present value using the present value function of this 1,000? What is the present value of this other 1,000? So 2 years from now, if I'm getting a 1,000, what is that 1,000 worth today? If 2 years from now I'm getting, rather this is 3 years from now, I'll be getting 2,000. What is that worth today? That is what that number means. Okay, so the net present value will be a sum of these numbers. So if I'm working out NPV, I could do this sum, highlight all of this, and I get an answer. I can get that directly by using the NPV function. So NPV, start with the rate like we said, then highlight all this, then add the initial investment. You should get the same answer. That's why we are saying the net present value is a sum of all present values for that whole period. Okay, so for the 5-year period, we have worked out the present values would be this, if you remember what the definition of present value is. And that number should be the same as that number. Okay, I have not removed this should be plus this. I did not add this. I should add the initial investment there to get the same answer, right? Okay, so that's that NPV. I think actually the calculation I had done it here. So that's the same number as that one. IRR, like we have said, you will just write IRR, the function, then highlight all the values, including the invested amount. That's a difference. With NPV, you're only highlighting the expected cash flows and adding the invested amount outside of the brackets. I hope that makes sense. But with IRR, you're putting everything inside the same basket, and it is generating some percentage amount. And this percentage, you will compare with this rate. This is the rate I was saying you would have been given a rate. So if this is higher than that rate, then that's a good thing. If it is lower than that rate, then there's a problem with that investment. And we can try and play around with these numbers and see if we can get a lower rate. Okay, 6% still marginally okay. If I have 1,000 here, then this becomes lower than that, which is a problem. Okay, so it gives you an IRR less than the ideal rate of return, then you have a problem. That venture is not worth getting into, right? So what I will do is send you a copy of this. Hopefully you'll be able to open it in Excel. And hopefully today we have been hearing each other. So I will send you a copy of this, and you should be able to get a recording of this. Then in the next session, which hopefully, if things go as they should, it should potentially be on Saturday, but if there is any change, I will let you know in good time. We will go through some more examples of the same thing. Okay. And also mop up any other. We will look at the syllabus again and see if there's any functions that are left. And like I've also said, if you also do some investigation and find some other functions that we might not have looked at, you need to raise that and we will look at them. Otherwise, we started off by looking at this PMT and we did IPMT, and I think you have copies of this worksheet. And today we have talked about PV, NPV, and IRR, as well as doing some summaries of things we have done before.
So we talk about the qualifications and disqualifications of directors. The Companies Act does not lay down any academic or shareholding qualifications for a director. And there's a widespread misconception that a director must necessarily be a shareholder of the company. But unless the articles provide otherwise, a director need not be a shareholder of the company. But financial prudence is that you as a director, you must have a stake in this company, because you need to be actively involved. You want to make it work. You want to make it be successful. And how do you make something successful if you're not sharing in the profits as a shareholder? So the articles normally provide that a director will have certain shares for that company. So you remember the Companies Act is not the one saying that a director must be a shareholder, but the articles of a specific company will more or less provide for such an arrangement. This is because of the financial prudence, where you have that desire to see this company succeed. And if the articles contain a provision that the qualification of a director shall be the holding of a certain number of shares, then all the directors must hold that number of shares. There's no exception. What the articles provide is what will be done. And the articles also generally permit directors some time within they can acquire these shares, but it must not exceed 2 months. So what the articles provide that the directors own shares it only gives them a time frame of 2 months. You're given a grace period of 2 months for you to acquire the shares that are prescribed by the articles in order for you to be appointed as a director. So where you don't purchase them, you cease to be a director automatically. There's no option of if. It's either you do or you don't. So when you don't, you're no longer a director for the company. And a director who vacates office for failure to acquire the share qualifications, you're liable for a penalty for every day that you continue to act as a director after the said period. This is provided for, the penalty will be provided for and agreed upon. But the minute you refuse to acquire these qualification shares and you keep acting on behalf of the company, then you can be sued. And the act specifically provides you being liable for a specific amount of money. So we talk of every director required by the articles to hold the specified qualifications and who's not already qualified to obtain the qualifications within 2 months. And we have said you vacate. Continuing to do so, you attract a penalty. So in Ivan Arthur Camps, the respondent, in his capacity as a director of a company, had been charged with several offenses under the Companies Act. Although the directors had, under Article 96 of the Company's Articles of Association, duly appointed him to be a director, and he had acted as such, he had never acquired the required share for qualification. But in a statutory return, subsequent to his appointment, he was shown as a director. So the magistrate held that the respondent had never possessed or acquired his qualifying share, so his appointment was invalid, and there was no case for him to answer. And the respondent was never a de facto director. And in the event that a de facto director was not criminally liable as a director for offenses under the Companies Act. So this case was appealed, but the appeal was dismissed. The court holding that a de facto director was not liable for criminal offenses. On further appeal, it was submitted, and the respondent was validly appointed as a de jure director, and therefore he was a de facto director, and a de facto director was criminally liable. So the court in R versus Camps held that the word director includes a de facto director unless the context otherwise requires. And looking at the mischief at which the sections in question aimed, then such a person whose conduct should be subject to the section is a person who has been duly appointed as a director. So what this case to us, what it means that if you don't acquire the prescribed shares by the Articles of Association and you continue acting in your capacity, you are criminally liable for the acts that you commit, for any contract that you enter into the company, knowing full well that you are not a director as per the Articles of Association. So for the purposes of the acts you commit, you are deemed a director. You cannot detach yourself from what you have done. We talk about, and for the age, if the articles provide otherwise, we again, you remember we read the act in conjunction with the articles. The articles guide the member to the company. So what the articles provide will more or less take, is what will be done. So when do we disqualify directors. So a director will be disqualified if, one, he is adjudged to be of unsound mind. This means he has no capacity to enter into any agreement. He has no capacity to bind the company for any contract, for any service. He has no capacity to act on his own behalf. Therefore, that person is automatically disqualified. You see, under the law of persons, if someone is of unsound mind and he has been defined as such, the capabilities of this person are put in question. And once your capabilities are put in question, whether you're able to differentiate between right and wrong, and whether you are aware of what your actions actually mean, then you are protected from making decisions that may harm you or harm others that you are relating with. So where an individual is to be adjudged that he is not able to make decisions that make sense, that make that relate to what is happening, then that person is disqualified as a director. We talked about the element of someone showing up for the work they've been given. And where you're absent for 6 months, you do not appear for these meetings for 6 months, then you're not taking part, you're not doing the company a service that you were intended to do. So for that, you will be disqualified. So where a person is an undischarged bankrupt, insolvent, this is where you're not able to meet your day-to-day finances. If you're not able to cover your debts, we talked about a director being a person we expect to guide the company. And if you are not able to do this on your own businesses, then you'll be disqualified as a director. So where someone has been convicted of an offense to more than 6 months, you've been in prison, and 5 years have not elapsed from the date of expiry of the sentence, you will be disqualified. You are not the face of the company. The board of directors basically is what the company, you see, the shareholders will be in the background, having delegated the authority to the directors to run the business from day to day. So whoever is representing the company in meetings, whoever is announcing their annual reports, whoever is advising the company, cannot be one who's convicted. It unfortunately brings a negative report to the company, on the company. And you're also disqualified if you fail to pay any call on your shares for 6 months. Remember, the articles want the directors to own shares so that the directors are able to work hard to make sure the company is making profits. So when you've been allocated shares by the articles of association, you are given 2 months. You remember, the time period is 2 months for you to pay up. When you're not able to do that, you have extended up to 6 months, then you're disqualified as a director. Where you have been found guilty of fraud in relation to the company or any breach of duty to the company, we said a director acts either as an agent, either as a trustee, and as a managing partner. So where you are acting in the interest not for the company, you will be disqualified. Where you engage in activities that put the company at risk, where you engage in activities that seek to defraud the company, you're automatically disqualified to be a director. We talked about the age limit between 21 and 70, unless the articles provide otherwise. So if you're under the age of 21, you will be disqualified. If you're over the age of 70, according to the Companies Act, you will be disqualified. The articles provide otherwise. They must do so in accordance with the law, and they will guide us on how to go from there. So where you are an undischarged bankrupt and you continue to be a director, Section 188 says that if you continue to do that without the leave of the court, you're liable to imprisonment. The period will be set by a court of law.
Hi students, welcome to another session of Manifested Online Classes. So in this session, I want us we continue with the topic number 3, subtopic number 5, financial statement of cooperative societies. And specifically on this session, I want us we look on an illustration question regarding presentation of financial statement of a cooperative society. So I want us we go through the illustration and then we see what was required. So we are told Marura Farmers Cooperative Society deals in marketing of two brands of coffee, Safi and Mzuri, on behalf of the members. As per the society's bylaws, the society is allowed to retain 20% of the sales for Safi and Mzuri for operation and pay the balance to the members. The following trial balance was extracted from the books of the society as at 31st of December 2021. We have a trial balance there. We have expenses relating to Safi, which include marketing expenses, processing materials, processing wages, and then we have expenses relating to Mzuri, which include marketing expenses, processing materials, processing wages. Then we have loans to members. We have dividends from investment, accrued rents, salary provision, appropriation account, revaluation reserve, statutory reserve fund, entrance fee, share capital, members deposit, salary creditors, bank overdraft, interest on loans to members, and then we have traveling expenses for staff, for committee members, bank charges, bank interest, salaries and wages, committee education, committee seating allowance, printing and stationery, general meeting expenses, members education, entertainment, legal fee, cash in hand, Wakulima Bank Limited savings, investment in Wakulima Bank Limited, receivables from members, receivables from non-members, and then finally we have equipment. Then we have some additional information. Number 1, we are told Bora Limited market Safi and Mzuri brand for Marura Limited. On 31st of December 2021, Bora Limited sold Safi and Mzuri brands for $175,000 and $115,300 respectively. Bora Limited remitted the above amount to Marura Farmers Wakulima Bank on 15th of January 2022. Marura Farmers Cooperative Society does not maintain a US dollars account in Wakulima Bank. So as far as that information is concerned, it is important to note that this company, which is called Bora Limited, which you're told market Safi and Mzuri brands on behalf of the cooperative society, this is like an agency. This is just like KTDA, which is responsible for marketing and selling tea on behalf of various tea factories. So once KTDA sell tea, it remit now money to the bank account of various tea factories, and then which will be able now to pay their farmers. The same case with this particular Bora Limited is an agency of Marura a cooperative society. It market and do what? Sell those two coffee brand on behalf of that cooperative society. So therefore, once it sell, definitely it remit the money to the bank account of the cooperative society. But because you're given the sales in US dollars and the other figures are given in shillings, we have to translate those particular sales into Kenyan shillings, and automatically we're going to translate them using the exchange rate which was existing at the date the money was sent. I hope you can see we are told the money was sent or was remitted on the bank to the bank account of Marura Farmers Cooperative Society on 15th. So that is the exchange rate we are going to use. So in number 2, we are given the exchange rate for the two currencies, as shown below. So we're given the exchange rate on 31st of December 2021, which was 105 shillings, which was equal to $1. And then on 15th of January 2022, $1 was equal to 100 Kenya shillings. Automatically, in this case, I've said when translating the sales for the two coffee brand given in the information number 1, we are going to use the exchange rate on the date the money was remitted to the bank account, that is on 15th of January 2022. Number 3, we are told audit fee of 6 million is to be provided for. Number 4, salaries and wages amounting to 3.2 million had not been paid. These are accrued salaries and wages. 5, interest on members' deposit is to be provided at shillings 6.08 million. And then finally, we are told, as per the relevant ministry's regulation, cooperative societies are required to transfer 20% of their net earnings to statutory reserve fund. This is something I mentioned in the first topic or in the first lesson of this particular topic, that cooperative societies are required to 20% of their net profit to a statutory reserve fund. So what are we required as far as that question is concerned? We are required to prepare the following financial statement for Marura Cooperative Society for the year which ended 31st of December 2021. Number 1, Safi Brad Marketing Account showing the profit and loss. Number 2, Mzuri Brad Marketing Account showing the profit or loss. And Part C, statement of profit or loss for the year which ended 31st of December 2021. And finally, statement of financial position. So as far as the first two accounts are required, Part A and Part B, whereby you're required to prepare the marketing account of the two coffee brands, we're required to prepare those two accounts basically to show the profit or the loss which was realized from selling these two coffee brands. And what we are going to do, we are going to take now the sales, the sales of the two coffee brand, which is given in the additional information number 1. And then there is some information which are given in paragraph 1 that this cooperative society is required to retain 20% of the sales and automatically remit the rest, which is 80% now to the members. So once we take the sales given in number 1, and we determine the amount to be retained, which is 20%, the amount to be paid to the members, which is 80%. Then we are going to less now the expenses, specifically relating to those two coffee brands. So we start with Part A. Part A of that particular question. We are required to prepare a Safi brand marketing account, which is for the year which ended 31st of December 2021. 31st of December 2021. So in this case, we need to have just a single column here, and our figures are in thousands of shillings. So what do we start with here? We start with the sales. The sales from this coffee brand, and we are given that information in additional information number 1. We are told the sales from this coffee brand, that is a Safi, it was $175,000 US. $175,000 175,000 US dollars. Because these sales are in US dollars, so what we need to do, we need to translate these into Kenyan shillings. I've said we're going to use now the exchange rate when the money was remitted out to the bank account of the cooperative society. The money was remitted on 15th of January 2022, in which case now the exchange rate was 100 shillings, which was equivalent to $1 US. So we multiply that with what? With 100, so that we get the final figure here. So let's get the final figure. So this is 175,000, then times 100. So that will give us 17.5 million. Take into account our figures are in thousands of shillings. So that will be recorded there 17,500. Then what you are told is that out of these particular sales from these two coffee brand, now the cooperative society has to retain 20% to cater for the expenses associated with marketing and selling this particular coffee brand, and then 80% of these sales will have to be paid to the members, or basically to be distributed to who? To the members. So therefore, the first thing we need to do, even before we list now the expenses. So first of all, we have now to deduct amount due to members. Amount due to members, and basically in this case we have said the amount due to members is 80%. Amount due to members. That amount due to members in our case we have said is 80% of these sales, because we are told the cooperative society is supposed to retain what? Supposed to retain 20%. 20%. So what is 80% of 80% of this? 80% of 17,500, which will give us 14,000. So this is the amount now to be paid to the members, meaning that the amount retained by the cooperative society, and which is now 20%, is how much? Is 35. So basically what that means is that this particular amount should be equal to, this amount should be equal to 20% of this. Maybe you can just confirm 20% of 17,500. That should give us 35. That is the amount to be retained by the cooperative society to cater for the expenses associated with marketing and selling this coffee brand. So then what we need to do is basically to go ahead and list now the expenses. We list the expenses. So we are given the expenses, or we're given specific expenses relating to marketing and selling this coffee brand, and those particular expenses are given in the trial balance. I think the first item in the trial balance, we have the expenses associated with marketing and selling Safi. So we have marketing expenses, which is an amount of 640. We also have processing materials, an amount of 860, and then we have processing wages, which is an amount of 900. Yes, an amount of 900. So wherever you get down there is basically now the profit which this particular cooperative society was able to get from selling this coffee brand. So 35 minus 640 minus 860 minus 900. So this will give us 1100, and basically this is now the profit for the year from selling and marketing this particular coffee brand. So basically that's what the examiner was requiring there, and you can see how many marks were allocated there. The marks allocated were 3. So for recording basically these particular items here, the sales and these particular expenses here, then you had to get those 3 marks. So let's move to part B of that particular question. Part B. of that question, and we are required to prepare now a marketing account for the other coffee brand, which is Mzuri brand marketing account, which is equally for the year which ended 31st of December 2021. So our figures are in thousands of shillings, and we're following the same format. We start with the sales of this particular coffee brand, and that is given in the additional information number 1, which was 115,300. But this take into account our US dollars. We have to translate that to Kenyan shillings using the exchange rate which existed on the date this money was remitted to the bank account of the cooperative society, and this will give us 11,530,000. So just like what you have done here to this, we need to less the amount due to members, the amount which was supposed to be paid to the members from this particular sales. So we less amount due to members. In this case, you have said the amount due to members is 80% of the sales. 80% of the sales. And then what we get here is the amount retained by the cooperative society to cater for the expenses associated with marketing and selling this particular coffee brand. So 80% of 11,530. Okay, we can take that again. 80% of 11,530. Yes, that will give us 92.24. That is the amount which was due to members. And then how much amount was retained here? We deduct that from 11,530, which will give us 23.06. So this is the amount which was retained by the cooperative society and which was supposed then to cater for the expenses associated with marketing and selling this coffee brand. And we are also given those particular expenses. Those expenses are given in our trial balance there. So what we just need to do is to record them here. So we have marketing expenses. Marketing expenses, an amount of 150. And then we have processing materials. Processing materials, an amount of 320. And then we have processing wages. Processing wages, which is an amount of 30. Yes. And then from there, what we do, we get the profit for the year. The profit for the year from this coffee brand. So what do we have here? We have an amount of 2306 minus 150 minus 320 minus 30. That gives us 1806, which is now the profit for the year. Equally, that is what was required as far as part B of that question was concerned. And these are some of the items which were marked as far as that part is concerned. And by doing that, you get now your 3 marks. So let's move to the other part of that particular question, that is part C. But even before we do that, there is something we need to note here, which is very, very important. One, when the year was coming to an end, this particular agency, remember we have said that this cooperative society has an agency which is called what? Bora Limited. As per the information given in note 1, this agency had not limited this amount of money to the bank account of the cooperative society as at the end of the year. So therefore, this amount here, 17,500, and also this one, 11,530, it was an amount which the agency owed to the cooperative society. So therefore, in preparing our statement of financial position, this particular amount plus that one, because it is the amount which the cooperative society was expecting, it will be recorded there as an asset. So basically, we refer to that as the amount now to be received, or the amount receivable by the cooperative society from that agency. On the other hand, this particular amount which was due to the members, 80%, this amount was not yet paid to the members of the cooperative society when the year was coming to an end. And therefore, in preparing our statement of financial position, this one will be recorded there as a liability, because this is what the cooperative society was supposed to pay to the members. It had not paid that amount. So therefore, it is important to note that. Let's move to part C of that question. And part C, we are required to prepare now a statement of profit or loss for the year which ended 31st of December 2022. Now, this one is prepared to determine the profit or loss for the entire cooperative society. Remember, what you have prepared in part A, part B is prepared to determine the profit from marketing and selling the 2 coffee bread. So part C, we are required to prepare a statement of profit or loss, statement of profit or loss, which is for the year which ended 31st of December 2021. 31st of December 2021. So in this case, we need to have 2 columns. And we prepare these by comparing the incomes of a cooperative society with the expenses. With the expenses, automatically we start with the incomes and then we less the expenses. So which are some of the incomes of this particular cooperative society? So even before we go back to the trial balance, because we know our cooperative society is responsible for marketing 2 coffee breads on behalf of the members, we know that from marketing of the 2 coffee bread, there was a profit of 1,100 from marketing and selling of Safi, and 1806 from marketing and selling of what? Muzuri. So that is the first source of income to this cooperative society, and that is what we bring here. So profit from the 2 coffee bread, Safi, which is a figure of what? Of 1,100. And then we also have the profit from the other coffee bread, which is Mzuri, a figure of 1806. Then what we need to do, we go back to the trial balance. We take the other incomes of this cooperative society. It's important for you to remember all incomes have a credit balance. So when checking for incomes from the trial balance, you check the items on the credit side of the trial balance. So the items on the credit side, I think the first item, we have dividends from investment. Dividends from investment. Dividends from investment is a figure of 470. Below that, we have accrued rent. Accrued rent, these are liability. Sundry creditors is a liability. Appropriation account, this is like the retained profit at the start of the year, which is not an income. Revaluation reserve is a component of equity. Statutory reserve fund is a component of equity. And then below that, we have entrance fees. This is still an income to a cooperative society, and this entrance fees is a figure of what? Is a figure of 300. Below that, we have share capital, members deposit. None of those is an income. Sundry creditors, bank overdraft, All those are items of liabilities. And I think finally we have interest on members' loans. Interest on members' loans, members, or interest on loans to members. Remember what you have said is that once a cooperative society give loans to the members, a cooperative society definitely will have to charge some interest. That interest charged by the cooperative society is basically what is an income. Yes, so I think those are the only incomes which we have. So then what we need to do is to get the total incomes. So let's add all those figures so that we get the total incomes. We have 1100 plus 1806 plus 470 plus 300 plus 35 890 35 890. Okay, yes, that will give us the total incomes of 39 566. Yes, after getting the total incomes, what do we do next? We proceed and we less now the expenditures. The expenditures of these cooperative societies, expenditures of the cooperative society. So here we have a number of expenses, and before taking the expenses in the addition in the trial balance, it is always advisable first of all deal with the expenses affected by the additional information. Let's go to the additional information. In the additional information, number one, I think we had information about sales of the 2 coffee brands. That has nothing to do with the expenses. Number two, the exchange rate that do not affect expenses. And then number three, we are told audit fees to be provided for. Audit fee to be provided for, that is an expense. But equally, because we are told this audit fee was provided for, it means that when the year was coming to an end, this audit fee had not been paid. Meaning that in our statement of financial position, there is a liability. So we have audit fee of 6 million, but remember all our figures are in thousands of shillings. And then number four, we are told staff salaries and wages amounting to 3.2 million had not been paid. So we have staff salaries and wages. So what we do, we take the amount which was not yet paid at the end of the year, which is 32, and then we add to this, we add the amount which had already been paid, and this is the amount appearing in the trial balance. So the amount appearing in the trial balance as the staff salaries and wages is a figure of what? Yes, is a figure of 2290. 2290. So we add the two figures, so that now we get the total staff salaries and wages for that year. So we have a figure of 3200 plus 2290. So the total staff wages and salaries for that year is a 5490. So let's go to note number 5. Interest on members' deposit is to be provided for. Remember, in this case, we have said that interest paid to members based on their deposit, this is an expense. This is an expense. And equally, it is also important to note that this amount are not being paid. It's just provided for. So therefore, still in preparing our statement of financial position, this will be a liability. So I think we are done with that point. And then number 5 is all about the amount to be transferred to the statutory reserve fund. That is not an expense. So what that means is that we go back to the trial balance which you are given, and we pick now all the other expenses. It's also important to note that all expenses in the trial balance, they have a debit balance. So we check the items on the debit balance, on the debit column of the trial balance, that is. And I think we can start from where we have traveling expenses. That, I think, where we have the first expense. It is important for you to note that we have some expenses which relate to these two coffee brand, Safi and Mzuri, and because we capture those particular expenses here in preparing this particular account, we don't take into account those particular expenses. Those expenses specifically relate to Safi and Mzuri. What we are recording here are the general expenses relating to the cooperative society. So we have traveling expenses for staff and committee members, a figure of 80 and 100. And then we have bank charges, an amount of how much? An amount of 200. We have bank interest, which is a figure of 890. Then below that we have salaries and wages. We have already dealt with that here. And then we have committee education, that is the other expenditure. Committee education, which is an amount of 1,000. Below that we have committee seating allowances. This is committee allowance. We have committee okay, this is a committee's education. Committee's education, which is 1,000. Then we have committee seating allowances, which is a figure of 1110. And then we have printing and stationery. So printing and stationery, we have a figure of 2050. And then we have general meeting expenses. General meeting expenses, an amount of 500. Below that we have members education. Members education is a figure of 1,500. And then below that we have entertainment. Entertainment is a figure of 50. And then next and finally we have the legal fees. Which is a figure of what? Of 400. So those are, I think, the various expenses which relate to this cooperative society. I hope we have not skipped any. Yes. So what then we need to do, we need to add all those particular expenses of this particular cooperative society so that we can be able to determine the profit or what? The loss for the year. So let's add all these particular expenses, starting from where we have audit fee, 6,000 plus 5490 plus 6086 plus 80 plus 100 plus 200 plus 810 plus 1,000 plus 1110 plus 2050 plus 500 plus 15 plus 50 plus 400. Yes, so that is giving us a total of 376. So what we need to do, we need to less that now from the total incomes which we have here. We deduct that from 39,566. So that will give us the profit for the year. The profit for the year of 14,190. 14,190. So basically that is it, that what is required as far as that part was concerned. Preparation of the statement of profit or loss, and in that case now the examiner had given how many marks? The marks were allocated to that were six. So by recording those particular items of incomes and expenses, you had to get now 6 marks. So finally, let's prepare now the statement of financial position as required in part D of that particular question there. So you prepare statement of financial position. Statement of financial position. That is part D. You can just refer to it as abbreviated as SOFP, as at 31st of December 2021. 31st of December 2021. So remember, you say that it is a statement of assets, liabilities, and equity. So we just need to have a single column here. And we start by recording assets. And remember what we said in our first session. As far as this is concerned, we don't need to classify the asset into non-current and current. We just record asset starting from the most liquid to the long term. And I think we are given the asset starting from where we had our last expense, the legal fee. Below that we have cash in hand. Cash in hand. The cash in hand is a figure of 540. Then below that we have Wakulima Bank. Wakulima Bank Limited savings, which is an amount of 6780. And then we have still investment in Wakulima Bank Limited. Wakulima Bank Limited, which is a figure of 6550. Then below that we have receivables. We have receivables from members, which is a figure of 2960. We also have receivables from non-members, a figure of 22,500. And then we also have office equipment. Office equipment is a figure of what? Is a figure of 900. Yes. So I think those are some of the items which we have in the trial balance. But I think also below the various expenses relating to Safi and also Mzuri, we have now the loans to the members. Remember, we have said that once a cooperative society has given loans to the members, advanced loans to the members, these particular loans to the members to a SACCO or even to a cooperative society is an asset. The cooperative society expects now the members to repay back that amount of money. So basically that is an asset. Then what else do we have? Maybe from the additional information. From the additional information number 1, we have now the amount which this cooperative society was yet to receive from the marketing agency, which is Bora Limited. So we can just refer to that as the amount due. This is the amount which was not yet remitted to the bank account of the cooperative society by the marketing agency, which is known as what? Bora Limited. And this amount, because it is given in terms of US dollars, we have now to convert that now to Kenyan shillings. So we take the sales from Safi, 175,000 US dollars. We can just take it as 175. And then from the other coffee brand, 115.3. And then we get the total. We translate that now to the Kenyan shillings by multiplying that with the exchange rate on the date the money was remitted. So we have 175 plus 115.3 times what? Times 100. So this is the amount of money which now Bora Limited was yet to remit to the bank account of the cooperative society. So therefore, to the cooperative society, this is basically an asset. So that's what we have in note number 1. Additional information, note 1. Note 2 has nothing to do with the sales. Note 3 is that is a liability. Note 4, that is still a liability. And then number 5 is still a liability. And then number 6, this one will affect now the appropriation account. I'll be able to show you now the necessary what adjustment we are going to make as far as that is concerned. Yes, so what we need to do here is to get now the total assets. So let's add all these assets starting from where we have 540 plus 6780 plus 26 550 plus 2690 plus 22 500 plus 900 plus 972 340 plus 29 030 030. Yes, that will give us a total figure here of 1,061,330. So those are the total assets. Next, we record now equity. Equity, this one comprises of a share capital, members deposit, plus the various items of what? Of reserves, of which all these items, they have a credit balance. So let's start by recording the share capital of this cooperative society that is given in the trial balance. Share capital is given as a figure of 900. So then below that we have members deposit, which is a figure of 64 650. Yes, and then from there we have various items of reserves, starting with just above the share capital entrance fee, we have statutory reserve fund. This one will need to be adjusted because whatever you given there as a statutory reserve fund, this is a statutory reserve fund at the start of the year, and then what you're told as per note number 6 is that 20% will 20% of the net earnings is the same with the profit for the year, will be transferred to statutory reserve fund. So this should be 20% of what? 20% of this profit for the year. 20% of that what? Profit for the year. So it should be 20% of 14,190. So that we get the statutory reserve fund at the end of what? Of the year. So then below that, or basically above that, we have revaluation reserve. Revaluation reserve that remain the same, which is a figure of 750. We are going to compute that figure. And still we have appropriation account. Appropriation account, these accounts still, or these figures still need to be adjusted because what you're given there is the appropriation account at the start, which is what? Which is 60/50. To this, we should add the profit for the year. The profit for the year, remember, is 14,190. But equally, we are going to less the amount which was transferred to the statutory reserve fund, which is 20% of 14,190. 14,190. And we get now the appropriation account balance at the end of the year. So I think we have picked all the items of equity. We have picked all items of what? Of equity. So I think what we just need to do here is to get now these final figures, starting with the statutory reserve fund. So let's first of all get 20% of this, 20% of 14,190 plus 13,740. That will give us 16,578. What about the appropriation account balance? So we have okay, we have what? We have 6050 plus 14,190, and then to that we less what? We less 20% of 14,190, and that will give us 17,402. Yes. So those are the items of equity. So what we then need to do is now to get the total equity. Let's get the total equity by adding all these items, actually starting from there. We have 17,402 plus 750 plus 16,578 plus 64,650 plus 900,000. 900,000, which will give us 999,380. So that is the total equity. So what we need to do next, or actually finally, we need to record now the liabilities. The liabilities. So we have various items of liabilities. Let's start with what we have in the additional information. In the additional information, number 1, there is something, first of all, you need to remember that there was amount due to members. There was some amount which was this cooperative society was supposed to pay to the members, which was 80% of this amount, which was from the sales of the 2 coffee bread. So we can just compute that as 80% of this, 80% of 29,030. Although if you go back to what we prepared in Roman 1 and also all part A and part B, you can be able to see the amount due to the members as far as the sales of the 2 coffee bread is concerned. If you add those, the amount from Safi brand marketing account, Mzuri a brand marketing account, should be able to get the same figure here as 80% of the total sales of the 2 coffee bread. So we have 80% of 29,030. That will give us 23,224. This amount which this cooperative society was yet to pay to the members. So that's what we have in note 1. Number 2 is about exchange rate. Number 3, we have provision for audit fee. For audit fees, this amount was not yet paid. It was just provided for. So therefore, it is a liability, 6,000. And then number 4, we have accrued salaries and wages. Accrued salaries and wages is 3.2. And then below that, number 5, we have provision for interest on members' deposit. Still, this amount are not being paid. It was purely provided for. That's why we are accounting for it as a liability there. I think with that what we have. Yes. So let's then go back to the trial balance and we pick now the other items of liabilities. Remember, all our liabilities, they have a credit balance. So starting from where we have dividends from members, below that we have accrued rent, which is 470. Below that we have salary provisions, sundry provision 4950, 4950, and then down there we have sundry creditors, which is a figure of 3410, and then we also have bank OD, bank overdraft, of 6150. Yes, so I think we have recorded all items of liabilities. None of the item which you have not recorded. Yes, so what we just need to do here is now we get the total. Equity and liabilities. So for the total equity and liabilities, we take the total equity there, and then we add all these items of liabilities. But first of all, we add these items of liabilities. We have 23,224 plus 6,000 plus 3,200 plus 60,86 plus 470 plus 4950 plus 3410 plus 6150. Yes, plus what we have there is 999 380. Okay, let me take that again. Okay, so we have what? We have 999 380, and then we have 23,224 plus 6,000 plus 32 plus 60,86 plus 470 plus 4950 plus 3410 plus 6150. Yes, so that is giving us the same figure there as 1061 330. 1061 330. So basically that is what was required in that part D of that question. These are the items now which were to be marked. But definitely that particular statement of financial position, as you can see, there are so many entries, entries, and basically by doing that, you are allocated 8 marks as far as that question is concerned. So that brings us now to the end of that particular illustration as far as the preparation of financial statements by cooperative societies are concerned. And I think that is the most recent question on cooperative societies. There is another question which was tested back in the year 2010. So if you can be able to access the past papers for 2010, you can be able to check a question which was tested. So I think was question number 4 from that particular sitting. So therefore, we stop at that particular point. See you in the next session as we move to a different topic.
What are the general defenses in tort? So when one sues another claiming that the person has violated his rights and therefore a tort has been committed, the defendant, you who is being sued, you have defenses which you can use, but they're applying different torts and they may differ. This means we determine tort on a case-to-case basis, case-by-case basis. So it's not a one-fits-all kind of a defense. It suits the current tort that the defendant is being given a chance to actually defend himself. Number one, we have volentin and fit injuria. And this is that voluntary taking of a risk. You put yourself in harm's way. You have voluntarily exposed yourself to being hurt. We talk of football matches, we talk of cricket matches. And when that cricketer, the batsman hits a six and the ball hits you, you can't claim for compensation, either from the stadium authorities or the batsman, because when you took a seat, you accepted the risks while sitting in the stadium. So you voluntarily went to that game, knowing that this bat can fly and hit your head. This ball can, again, hit you. So when you are hurt, you cannot seek damages. And you sitting in that, this is where we find hotels and their parkings, and they state clearly that they will not be held liable for any damages. Parking is at your own risk. You have come, you have placed your own car in that, and you have paid for that parking. It's not free, but you have voluntarily chosen to come park your car at these, let's say in town. You have paid for parking. You have put your car somewhere. Let's even say in front of City Hall, and you have gone. So when you come back and find that your side mirrors have been stolen, City Hall, the county government of Nairobi will not double. You will not claim it from there. Despite you paying, and despite you assuming that the only thing they won't do is to clamp your car, but you have voluntarily placed you in that area. So when we talk of volentin on fit injuria, the most important thing is that the action is voluntary. You see, no one forces you to go watch a match in the stadium. You can as well watch it from home. So you voluntarily wake up and go. And you work with the informed consent that anything can happen. As we have given that example of parking, it's normally written parking at your own risk. You park at your own risk, even in these malls, in these, when you go to the mall, it's clearly written that parking is at your own risk. So anything that happens, they cannot be held liable. So two things will need to be established. The plaintiff knew or could have expected the risks involved in such a situation, and that the person agreed by a statement of fact to suffer the consequences of the risk without force or compulsion or threat. So in Kimji versus Tanga Mombasa Transport Company, the plaintiffs were personal representatives of a deceased who met his death while traveling as a passenger in the defendant's bus. The bus reached a place where the road was flooded and it was risky to cross. The driver was reluctant to continue the journey, but some of the passengers, including the deceased, insisted that the journey should be continued. The driver eventually yielded and continued with some of the passengers, including the deceased. The bus got drowned together with all those aboard it. The deceased dead body was found the following day, and the courts held that the plaintiff's action against the defendant could not be maintained because the deceased knew the risk involved and assumed it voluntarily. So the defense of volentin and fit injuria rightly applied. The bus company could not be held liable because other passengers disembarked. This one who urged the driver to continue did so voluntarily, knowing that the driver had insisted the road is not good enough. Again, the viability of of the defense of violent and fit injuria depends on the circumstances of each case. Otherwise, the consenting partner does not necessarily give an open check for you to be negligent or to act in any manner that you so please. So in Haynes versus Howard, the defendant's servant left a van and horses unattended in a crowded street. A boy threw a stone at the horses and they bolted. They exposed a woman and some children nearby to grave danger. And the plaintiff, a police constable, managed to stop both horses, but he did so at a great risk and sustained severe injuries. In an action brought against him, the defendant pleaded volenti, and it was held that the doctrine of assumption of risk did not apply because the plaintiff, in rescuing the persons in imminent danger, had acted under an emergency caused by the defendant's wrongful act. And it was immaterial that the persons to be saved were strangers. Therefore, the defendants were liable. So for this one, these owners of the horses could not claim that the police constable knew and voluntarily placed himself in danger. He acted out of an emergency, so the defendants were held liable. Another defense in court is that of an inevitable accident. We are not able to foresee circumstances, and despite reasonable care, there's nothing you could have done to foresee this. And when we say inevitable, it doesn't mean that the accident was bound to happen. Rather, it could not have been avoided despite reasonable care. So in Stanley versus Powell, the plaintiff was employed to carry cartridges for a shooting party. A member of the party fired at a peasant, but the bullet, after hitting a tree, rebounded into the plaintiff's eye. The plaintiff sued, but the defendant was not liable, as the plaintiff's injury resulted from an inevitable accident. It's not something we are foreseeing. You see, we normally pay insurance because that element accident happen when you're on the road and when you have a business, fires and all these things. But in this case, it's not something that can be foreseen. You see, in the normal course of business, in the normal course of that shooting, no one would have expected a ricochet bullet to hit the defendant, the plaintiff, in the eye. And those cartridges, they're normally kept safely. It was not intentional. It's not something that anyone could have done anything to prevent it from happening. The third defense in tort is an act of God. The difference between the act of God and an inevitable accident is natural circumstances. And this injury, for it to qualify under an act of God, the natural forces must be unforeseen and the effects must be unavoidable. So when a storm is taking place, if one can take precaution and avoid the damage, the defense cannot be used. We talk about hurricanes and the acts of God, but warnings are normally given that there is an alert that that hurricane may hit that particular land, so evacuate. You therefore cannot sue if it actually hits. At times they pass because it's something natural. No one has any control over it. Or case in point, in our locality, these mudslides that happen and landslides, if a warning is given and the inhabitants are told move to higher ground because this may happen, we don't have any control over how it may happen, and it may actually not happen because, again, as you have said, they're natural, they're not man-made. So any damage that is suffered in such a circumstance you cannot hold one liable, because if reasonable care has been taken, nothing else can be done. In the case of Nichols versus Marsland, the defendant had a number of artificial lakes on his land, and an unprecedented rain, such as had never been seen witnessed, caused the banks of the lakes to burst, and the escaping water carried away 4 bridges belonging to the plaintiff. So it was held that the bridges were swept by an act of God. The defendant was not liable. It was not his artificial lakes that carried the bridges. That rain, he had no control over the rain or the magnitude of that rain. We also have self-defense as a general defense in tort. And in this, where if someone injures someone or something that belongs to someone else while defending themselves or their own property, you can be excused if the force is reasonable. What cannot be excused is unreasonable force. That is, if someone punches you on the stomach, ideally you block the punch or punch him back. But when you go to get your gun and shoot him, that is excessive use of force. That is not even necessary. It's bringing a gun to a knife fight. It's not allowed. And for self-defense to actually work, you must prove that the defendant was under threat or under attack, and the defense, it must be for self-defense, not for revenge. As we've said, if someone punches you today, then you wait for them 2 days after and punch them, you cannot prove self-defense. It's something that is spontaneous. You've been hit, so you hit back. And it must be proportional to the attack or threat. We've talked of bringing guns to knife fights. It's proportional. If someone is punching you, punch them back. Don't go looking for knives to come harm them. And the principle is that the law will not hold you responsible for an action that you performed in order to save yourself or protect yourself. And where it was not necessary to use force, the law will not again protect you. So in Cresswell versus Sal, a dog owned by the plaintiff attacked during the night some lamb owned by S. The dog had just stopped worrying the sheep and started towards S, who shot it when it was 40 yards away. C stood for trespass to goods, that is his dog. And the courts held that S was justified in shooting the dog if 1, it was actually attacking the sheep, or 2, if he left the dog alone, it would renew the attack on them, and shooting was the only practical and reasonable way of preventing revival. So the onus of justifying the trespass lay on the defendant. An occupier of property may also defend his property where his interest is wrongfully interfered with. Again, reasonable force. So a trespasser in your land, you eject them using reasonable force. You do not go and get and probably cause more harm than necessary. So in that case of Cresswell versus Sal, if the defendant could show that dog that he shot was actually attacking the sheep, or leaving the dog go, it would mean the dog will come back and harass the same sheep, then the defense would stand. If not, it can't be a defense anymore. So the other defense is that of a mistake. And it's usually not a defense, because it's not good enough to say you didn't know you were doing something wrong. But it can be used in case of malicious prosecution. And this is where you feel probably you've been taken to court and you're able to show that this prosecutor or the ruling is made against you, either because of your gender, your ethnicity, your Christian beliefs, someone is acting with malice. They're not acting on the facts laid out. They're not acting as per the rule of law. They have picked on something that they feel they can use against you and they run with it. We also talk of necessity. An act you did was necessary in the circumstances. Let's say there's a fire going on in your house and you don't have water, but your neighbor has that artificial lake we were talking about. So you're justified to enter his land without permission to fetch water to put out the fire. You don't normally go jumping over fences, but the act of the fire necessitated you to enter into someone else's property without their approval. And the level of necessity should be very, very high, so that the wrong done is smaller in comparison to the one rightfully done. Putting out a fire that can spread even to this neighbor is more important than you jumping over his fence to fetch the water. So we have Cop versus Sharp. And in this case, the defendant committed certain acts of trespass on the plaintiff's land in order to prevent fire, as you've said, from spreading to his master's land. The fire never caused the damage and would not have done so if the defendant had not taken the precautions. But the danger of the fire spreading was real and imminent. So it was held that the defendant was not liable, as the risk to his master's property was real, and a reasonable person is in position would have done what the defendant did. And this is where we also say someone without any association with you or your neighbor, if he sees a fire, it would also be the reasonable thing to do. There's a lake there, there's fire there. You jump into you enter into this person's land, fetch water to put out the fire. So this element of necessity is back to back with what would a reasonable person have done. Is it necessary for you to enter someone's land? If yes, is that what a reasonable person would have done? So there's also a defense where someone acts under statutory authority. For example, these railway lines that we have, the noise that comes from, probably if you live in Syokimau and the SGR, when it arrives at the station and all the noise that accompanies it, you have no remedy to that because the construction and the use of the railway is authorized under statute. And the fact that they give the timings of the trains is them acting in a reasonable manner. You cannot stop a railway line from operating because it's noisy. You cannot tell them, no, when you're coming to pick your passengers or your goods, do so in silence. They're authorized by law to have that railway line there, and they'll continue to do so. So we have Vaughan versus Turf Vale Railway Company. And a railway company was authorized by statute to run a railway which traversed the plaintiff's land. Sparks from the engine set fire to the plaintiff's woods. So in this case, the railway company was not liable. It had taken all known care to prevent emission of sparks, and the running of locomotives was statutorily authorized. So because they have taken their due care, whatever happens after that, they cannot be held liable. They are allowed to operate these railway lines, and part of the dangers that are associated with them is that they may derail, they may fall in your land, but you don't sue. You cannot sue. They've not gone against what the statute authorizes them to do. In short, we have the capacity to sue or be sued. We had talked about when we were learning about administrative law, and we asked, can the government be held liable? So in tort, in Government Proceedings Act, the government is subject to liabilities in tort as if it were a private person, where the government, the respect of acts committed by its servants, breach of duties, and it's also liable for statutory torts. But it's not liable for acts done by members of public corporations like the boards that we have, maize and produce boards, the councils that are brought about. It's not liable for that. Infants and minors is that minority has no defense in tort. Infants and minors can be sued. But in instances where the intention, the malice or negligence is to be determined, an infant will be excused because they have not reached the mental stage where they know they're acting in bad faith. So that will be the basis of that. So the position of husbands and wives is covered by the Married Women's Property Act, and a married woman is liable in tort and may sue or be sued in the same way as if she was single. That is an unmarried woman. So the heads of states and diplomats, they're immune from the jurisdiction of the local courts. And the immunity is provided in the Vienna Convention of Diplomatic Relations and that Privileges and Immunities Act. So they enjoy immunity from civil and administrative jurisdiction of local courts. But this immunity does not extend to Kenyans employed by the UN. So for Kenyans, the local authority, the local jurisdiction applies. So corporations can sue and be sued in their own names, and they're liable to actions in tort. Trade unions, actions against them are limited, and no action shall be brought against trade union for torts. That is in the Trade Unions Act, Cap 233, Section 23. So persons of unsound mind are generally liable unless intent is a necessary element, and their condition being they could not have formed such intent. So for aliens and non-citizen, that is people who do not, their birth status is not in Kenya. They're not citizens by birth, by naturalization. So they're not, they can sue and be sued. So judicial officers are protected from civil liability for any act done or ordered by them in the discharge of judicial functions. So where a judge or magistrate utters words which tend to reflect on a person's reputation or orders a person's property to be attached in satisfaction of a judgment, no action can be brought against them for trespass. This means when a judge or magistrate orders that whatever is on your land to be sold off to recover the debt, you can't sue them for trespass. So their liability is they are protected from civil liability.
So today we we move on from where we were. We will do a bit of a recap and as well learn a few new functions. And I also want to spend a good section of this lesson specifically focusing on shortcuts, giving you a summary of several shortcuts as we learn new content as well. So I'll share my screen. So what I have here is a simple worksheet. So we will use this to do a bit of a recap of some of the things we have already learned, but as well we will use it to learn a few new things. So we'll talk about percentages, for example. You're familiar with addition, subtraction, and that type of thing. But we'll introduce percentages, we'll introduce some simple charts, as well as go through some conditional formula. Okay. So here I have a simple spreadsheet with some data. We could take this as employees of a small company somewhere. Okay, so I can rename this. Remember we said we can rename worksheets, so I can call this employee data, basic data. So what we want to start with is remind ourselves how we do percentages, or even before we do that, this looks rather plain, so we can do some formatting. Okay, so I want to first highlight that row, make it look better by making a title row bold. And also, I can move this out of the way and make this whole section, for the whole section I apply some visible borders. So what I've done there is used the home tab, then I went to this border option and selected all borders. All borders applies borders to everything. So then I can also do some color coding for this section, which is what we will be focusing on. So I can put some soft green color there. Maybe the title all needs the same color. Let's make that dark red and make the text white. Okay, so it's starting to look more interesting. Right, so that's just a bit of formatting. So let's start with the allowance. This is some data about some people. Okay, there are some people in different departments. We have their first name, their staff ID. So what we want to work out is an allowance based on a percentage that we've been given. Okay, so we'll say these people get an allowance. Let's say it's a blanket allowance to start with. They all get 30%. And this basic pay, I know the numbers look small. Let's say this is basic pay in dollars. They're being paid in USD. So suppose the allowance everyone gets is 30%, or let's make it 20% of their basic pay. How would we compute that? What formula would we use? Remember from last lesson, we said you need to remember a bit of your basic maths. So if we are getting 20% of 1,500, we will start with an equal sign like we start for all Excel formula and functions. Then we'll say 20%. So the good thing with Excel, there is a percent sign. So that is shift and 5. There are those of you who will want to do the long maths and do 20 over 100, which is the same as 20%. But because you're using Excel, you can do shift and the 5 key, so it will pick the percentage sign. Then for the times, remember it's shift and 8, then you want 20% of that. And remember, like from last time we said, we don't type the 1,500, we click on it instead. But because 20% is a constant in this case, we type it. So if I do that, I'll get this first person will get an allowance of 300. And we get some numbers there. It went beyond the range, so I want it only going up to here. Okay, so I've used autofill. Remember autofill from last lesson. So you just click on the board, on the cell that you're interested in, then point at this corner, okay, bottom right of the cell you've selected, then pull it downwards and you will autofill the formula. In other words, you will copy the formula to all the other cells. Okay, so which reminds me, suppose this constant, we wanted it, suppose it was given somewhere here. Let's say we had it in a cell here which said allowance, then there was 20%. So we want to read it. So somewhere already listed on the worksheet you're working with. Okay, so we have something like that. Let me increase the font a bit so you can see. Suppose it was already stored somewhere, then they stored the tax as well. The tax, let's say, is 35%. So it is all already on the worksheet indicated, the rates. So how can we use this here? Okay, let's think about that for a moment. For now, we have just been typing the percentage directly and has been working by copying this value multiple times. And if I go down this, you can see the cell reference is changing. This is changing. It started at E2, moving on. Okay, but the 20% is remaining constant, which is what we want to happen when we click it from here. So for example, let me just use an example to illustrate what I'm saying. Suppose this was not here, and we wanted to calculate it based on this formula. So we want to do something like that. Click on this 20, then times this 1,500. If I press enter, the first answer looks very correct. Okay. The only challenge will come when I try to copy it downwards. Okay. So if you remember, this reference has been changing as we go down the selection. You see what's happening with the Ks. We started at K4, which is what has that 20%. For the second one, it goes to the 35%. It's referring to K5. And you'll notice from here, it becomes zeros because there is nothing here. It is the default value there is 0. Then by the time it gets here, it will even generate an error because it will try to do K14. K14 is the one that has that. So how do we make it stick to that 20? Okay, then here we use what is called absolute referencing. Okay, it's one of those shortcuts. For you to get the absolute referencing means we will lock the 20%. That cell reference will not move down. So we could do it manually by typing the $signs like this. Okay, so if I type those $signs, you'll notice it will work out the correct figure. So in other words, as I click down this range, you will notice that K4 is remaining constant, which is what we want to happen. So an alternative to typing those manually is to use a shortcut. If I highlight this K4 and press F4, the F4 key on your keyboard. If you're using a laptop, you might have to do function F4. F4 are those function, or rather, when I say F, I mean the function keys at the top of your keyboard. It starts with the F1 all the way up to F12. On the machine I'm using, it goes up to F12. So when I press F4, it applies the absolute reference, and then that range will be locked. Right, so that's an important thing to remember. So suppose tax, let's use the same method to work out this tax. We want to start with an equal sign, click on the range, and we can press F4 at that point now that we know how to work with F4. Okay, 5, yeah, I have the right one. And F4, then we put a times, and then we click on this. But let's make it even more interesting. Suppose we are taxing even the allowances. We want to apply the tax to the allowances as well. when we're only taxing the basic pay, so it gives us that. Let me erase this part. But we want a formula that will tax even the allowances. So we will have to do odd mass, we call. So I will need to add those two. So I've done that last sign, then click on this, and this will be 35% of the sum of those two. Does that make sense? So I've done E plus F, that gives you 1800, and we are getting 20% of that 1800. All right. So that's one way to do it, but you could also use a sum function. Just a bit of a recap of what we have done. If I put sum here and highlighted those two, you still work. So still get the same thing, only that here I've used the sum, and it, at first glance, it might look like a very intimidating formula, but if you understand the logic of it, then it makes sense, because sometimes you will need to include the sum of a given range and get some percentage of it. So it wouldn't make sense for you to go adding all the values one at a time, like we have done before. If you had 10 values to add, the more concise way of doing it and the more efficient way of doing it is using sum function, which we looked at last time. But we'll do a summary of the formulas in a short while. So we have, this is how we are working out percentages. Okay, we have looked at two ways. You could write the percentages directly into the formula, or you could have them somewhere on the side. Then the computer or the Excel, the spreadsheet, will pick them directly from the range where that rate is indicated, right? So suppose if we think of things like VAT rates, different rates of different things. You can have the rate indicated in a specific portion of the spreadsheet. Then you will just need to click on that position, and then you will apply it, include it in your formula. Now, the net, let's do the net. This is simple math. So we will add the all income, everything that is coming in, then subtract the taxes. So we will need to do the sum of those two minus the tax. One way to do it is just do it directly, that plus that. Then you say minus this, and we have an answer. So it keeps highlighting all the way because I have some data there. So I will move this down. So we've looked at percentages. Yeah, it's not a very complex idea. We have also done a bit of a recap on formatting, and I've used the sum function here at least once. So these are things that will keep popping up. Now, a bit of some more formula. Let me move this out of the way. Some more formula. We now want to do a small analysis of this data that we have here. We want, for example, to count the number of people, get some data out of this spreadsheet. This is just a small sample. Suppose we had a spreadsheet with 1,000 people. We could be counting the number. We could do a bit of a summary of the data by getting the number of people in each department, maybe average age, if we had some age column here, average pay, and so forth. So let me bold this one, and I can merge and center this section. Okay, so merge and center is something we have not mentioned. It is used to merge several cells. So I want the whole of this section to be called analysis. Then I can bold, or rather I can apply some borders to it, so it looks more presentable. Okay, you can do all sorts of things in terms of formatting. So I think what we'll do is we'll take one of the lessons and we'll just focus on formatting, because it's an important aspect of this. All right, so we want to count the number of people in marketing. Count the number of people in marketing. Based on the functions we learned last lesson, can anybody remember any function we can use for this? We want to know the number of people in marketing based on this. We want to use a function that will check this place, and then it will give us the number of people here. Anyone remembers? Can post something on chat or say it out loud. So that would be the count if function. So we want equals count if. You remember we say these are conditional formulas. We want to check this range, select range. Nice thing is that it also gives you a prompt there. So we want to check that range. And what are we checking for? We're checking for something called marketing. Whenever we are typing text, we have to include speech marks. So if I do that, it will tell me from that range, it is finding two people in marketing, right? Now, there is a temptation to pull this down, to just autofill this. If I do that, then obviously there's something wrong with that data. The way to tell what is wrong with it is to actually look, if I move this out of the way and looked at the formula that is giving me this, the first one is doing the right thing, which is checking range D2 to D13, which is the range I want, for the word marketing. If I go to the second one, it has moved to, it is checking the range D3 to D14. Okay, so it has moved one step down, and it is still looking for marketing. So I need to update two things. I need to update the range. So it takes us back to the idea of absolute reference. So I want this range to be fixed where it is looking for these things, right? So I need to apply absolute referencing to that section. So I will highlight it and then press F4, right? So that fixes one of the problems. So now if I autofill this one, I'll get 2 all through because it is looking in the correct range all through, but it is looking for marketing all through as well. So I need to update what it is looking for. So I can do that quickly by just typing in what it is supposed to look for. For this section, it should tell me how many people are in cleaning, how many people are in HR, how many people are in IT. So I'm just updating the criteria for what it's supposed to be looking for. Then there will be sales. Sales. Then we have support as the last one. So what you notice, this is linked to this. So if I change any values here, so for example, if I have more people, let's say I switch, let me change one person from support, and let me just, or let's change from cleaning and just call it support. You'll see it will update that. So there's no longer anyone in cleaning, they're now called support. Okay, so same thing, if I updated one of these sales to HR, the data will automatically pick the change. So there will now be 3 HR, and there will be less, the one I reduced, less sales, right? So I didn't have any age here, so I will leave this out, or I can quickly, actually it's part of what we can do. Suppose we wanted to insert age here. We already have these columns. How do we add a new column? How do we insert a new column? We can insert a new column by just right-clicking just after where we want the new column. I want a column here called age, so I will right-click there and insert. Then I get a blank column and I can say age. Then I can put some random figures. Let me just pick some random numbers. 33. So these are people working for that company. What organization it is. We have a few people above 40, a few people in the 20s, and so forth. So we can decide to include that in some kind of analysis. So suppose we want to get the average age of people in marketing. For whatever reason, we want to collect some bit of demographic information. So we can use a function we used last time. So we can use average if. Okay. So we are looking at a department, then we will average the age. Let me switch this to. It does look like the numbers. It will look more natural if I switch this. Yeah. So notice what I've done. Let me just repeat that exercise. Suppose I wanted to swap this. What I've done there is selected this, copy, Control C, and I've just gone where I want it and done that. I used this, right clicked, and insert copied cells. Okay, then I will need to delete this. So what I've done there is insert copied cells. The only problem that creates is the range for this now becomes wrong. So I need to reselect this. So let me do this quickly. So highlight that the range was this. It was, I needed to press F4. That should fix the formula. Okay, back to what we were doing. We were trying to, no, it doesn't fix it completely. I still have the problem of needing to change this. Let me use a shortcut for this. I can use this. So it will check for K16 there. This will check for sales. I'm using absolute reference even for this section. In other words, even this, it will just look for support all through. In IT, instead of typing it there, I just reference it this way, and then I press F4 so that it will look for the whole range for the same thing, amounts, correct numbers, right? So we were trying to get average age. So we kind of updated our worksheet here to include age. So what we want to do is to get the average age by department, right? So we will need a function for that. We will use it's called a conditional function again. So we will do equals average if. Okay, so, and you will notice this one has 3 variables we need to insert there, 3 parameters. Okay, so we want to check here. We are looking at this section, and we are looking for people in marketing. So we want again to fix, let's just fix this. Remember that thing we talked about, absolute reference. We can do it right now so that we do the absolute reference this because we will be using the same range all along. Then we press that, then click on marketing, or we could write marketing, but let's go with clicking on it. So it will be looking at that range, searching for marketing, and what will it be averaging? So if you look at that, the template that was there, it asks us the average range, which is this thing here, average range. So in other words, say where you're looking, what you're looking for, and what will be calculating. Okay, and then we want this also absolute with an absolute. So if I do that, it gives me an average age of 30.5 for people in marketing. So if I look at those 2 people, it's 28 plus 33. What it has done is that it has added those 2 and divided by 2. Okay, so just to review that formula a bit. Let me zoom it in. The font a bit so you can see it better. If I did that, then move this a little bit. So it is average if this refers to the range where I'm getting the category of people I'm looking at. I'm looking at the departments, and then what am I looking for? This is a specific department I'm looking for in this range. In the range D2 up to D13, I'm looking for. This was referring to marketing. Sorry that I've not written the name this time round. Then this is what I am averaging. This E2 to E13 is where I am doing the calculation. So it has three parameters: the range where I am looking, what I'm looking for, and the calculation, the range which I will use for the calculation. Average if, and it works very similarly to sum if. If we wanted, for example, to get the sum, how much you're spending on each department on pay, yeah, we could include a sum here. But we can include that here. Let's just add it here, sum or total for the department. So you spending pay for that department. Okay, but let's do average first. Suppose we wanted the average pay. It's very similar. It's only that this time we will be doing the pay instead of the age. So if I already have the formula here, one thing I can do is just copy the formula over. Okay, you will notice it just writes 30.5 because everything here is frozen. So it is looking in the same range, it is looking for the same thing, and it is averaging the same thing. The same thing here is, if you look at that, that was the age. You can highlight it here. So what we want to do is to change that last one to, let's say we are averaging the net pay. It's just that last range I will change. And again, use F4, press enter, then it will tell me the average pay for those. For this will be, the first one will be correct because it's for marketing, but if you notice, we have not changed this, so it will be doing marketing all through. So we have to remember to update this one as well. Where it is looking, the criteria. So we need to do this, light it, click on this support, and so forth. So the one way I could have avoided this is to could have copied everything across. So if I did this, let's see, we had done K15, we had updated this. Anyway, let's quickly update this one. Control Y. Okay, so let me change this to not fix this. Yeah, I'm thinking through this formula. I think I don't need to fix this one. I want it to change as I copy it downwards. So I will do that and it will give me the right fix now. So what it is doing, let's see if this is correct. So it has checked in K15. This one has checked in K16. This one has checked in K17, and it has checked in K18, K19, and then there is no one in cleaning, so it is not finding any data. It has not found anything called cleaning. Now we don't want this to happen, so we can improve our formula to avoid seeing hashes. We can use if there is no result, then we get a 0 or something like that, but that will complicate the formula. But we can modify this to apply what is called error handling. Like if it is, there is an error, then it puts a 0. You can use something called if error. Then we say 0. Now that makes the formula rather long, but what it does is, this is what we are using, but we are saying if this generates an error, it will put a 0. Yeah, that's what it does. It's used for error handling. If there is an error in this formula, it will put a 0 instead of having those hashes, or you can have another form of error message, right? So what I want to do is to copy this across. So with spreadsheet questions, sometimes you have to do some thinking, even when you know it very well, like we have just discovered here. I was freezing this range, which I think I didn't need to. I wanted it, ideally it should be changing. As I scroll down, it should be moving from this one to this automatically. So that saves me the work of typing the departments. Like I type marketing, then type support. It makes it a very long process. Let's see, I'm too fast. All right, I will slow down, Joroge. So what I'm saying is, this average if, did you understand? I hope you understood what average if does. Average if calculates the average of a given range, but based on a condition. So like we are getting the average age by department. That is why we are using average if. We are not just getting the average of the whole set of data. We are getting the average by department using some criteria. Average pay, we will be getting, again, the average by department. So we will still, in this case, use average if. So let me repeat the average if. I see, that's correct. Okay, so average if. So I'll start with an equal sign, right? So average if, I will just write the function, right? Then I will look at this prompt here, or this template. It tells me to provide a range. Where am I looking? I'm looking at the department. So I have fulfilled that first criteria. Okay. Then to make this, to lock this range, because I don't want this to change. I want to look in the same range every time. I press in on my computer, because I'm using a laptop, I will press Fn. Fn is a function key somewhere at the bottom left of the keyboard. Then that will allow me to select the function keys up at the top of the keyboard. But that is only for a keyboard. If you're using a desk, or rather for a laptop, if you're using a desktop, you might not need to press the function key. So it will have a slightly different format, that keyboard. But I imagine most of you probably will be using a laptop. So it will be Fn, then F4. You hold down the Fn key at the bottom, F4 at the top. That locks the range. Then we said for this range, you don't need to lock. Then what am I averaging? This time round, I am doing the net pay. Okay, so this is the average range, the range I need to do the calculation on. So I can quickly run through that. I am looking here. This will have the list of departments. This will tell me what I'm looking for, the K15. Then I will get the average. When I find the marketing, do the average for marketing. When I find support, I do the average for support. Again, I want to lock this. So Fn plus F4, and I get my figures here. The formatting, again, I need to make this 16. Now this division by 0 is an error, so I can use error handling to cover that. Because there is no cleaning, what it is doing is, because it's an average, average is, it will take the total number of items, then divide by the number of items there are. So in other words, it will count. There is 0 cleaning people, but then it will divide that by 0. And if you divide things by 0 in maths, you get an error. So what I will do there is apply some error handling. So notice I'm not changing the formula too much. I'm just adding, if there is an error if error, then what will happen? I'll put a comma here at the end, and I will put either error or 0. You could even write the word error if you wanted to, but we don't want appearing. Let's just say 0, because the average pay is 0 if there's 0 people. That is, or you can have any other error message. If I did this, I'll get the word error. Okay, so hope that makes sense. So if error sometimes is quite useful for coping with any unexpected things happen. Okay, so you can either put an error. For example, if somebody entered, instead of entering an age here, they entered something like 29. So if they did that, then probably it will have a problem calculating, although in this case it has not generated any error. It would, in other cases, you can tell that this has changed. Something has changed here because it has not taken this text into account. So it is 28.5 in reality because it cannot calculate using text. All right, so that is a bit of a few more functions. I've gone through average if again. So we had said we can do sum if. The logic is the same. Suppose we want to get the sum of the pay by department. Okay, so it's same logic, except that this time around we are doing the sum. Okay, so these functions, I know they start getting a bit more intimidating as you go along, but once the logic of it clicks, then you will see it's not a very hard function. So what we want to do is to tell how much are we paying the people in marketing, how much are we paying the people, how much are we spending on the people in IT. Okay, so it's kind of a realistic analysis what we want to do. So I'll want to do sum if this time. Okay, so I'm still looking at departments. Then I will do the Fn and F4 to lock that range. Then what am I looking at? I'm still looking by department. Okay, then I will put a comma. And what am I summing this time? Still the net pay. So we want to know in total how much are we actually spending on these people. So I lock that range and I close the bracket. So it will give me the totals by department. So let me increase the font of this. And it will tell me marketing people, we spent 3,003. Let's see. Oh, that is these two figures. I was looking at this and wondering. Which says, so it is this plus that. Because we have used the net range. Support people, we have spent in total 8. Let me copy this down. We spent in total 1,794. So in other words, it has looked for support. It has added that to that. Give me the sum for that department. Okay, so it's a very useful function depending on what you're trying to look for. Very useful function for summarizing data or analyzing data. So that's a few more functions. What I wanted to do also here is, let's see. So what I wanted to do is to also use some other set of data to talk a little bit more about, just summarize the functions and the formulas some more. Let's look at a different set of data. So suppose I had this data here. Okay, this is a long set of data. I can use it also to do some of the same things. So this is a summary of the different formulas, some of the ones we did last time. So you know how to, this is addition, subtraction, multiplication, and division. So quickly running through that. Addition, suppose we wanted to add quantities, we said this one just add directly or subtract. So this one we will not dwell on. Subtraction, you just use a minus sign. But average, again, suppose we wanted to get the average quantity. These are it's a very long list. What I wanted to use this to show you also, suppose I had a very long range to select. If I do this, and I want to get the average of all these figures up to the bottom, this spreadsheet has about 2,000 different records. So one way I could do it is drag this down up to the bottom, keep going all the way up to the number 2,000, which is quite a long journey. So what I'll do instead is, on the keyboard, I'll hold Control and Shift. Control and Shift down, then I press the down arrow. Control Shift down arrow. So that's a shortcut. It selects the whole range. If you think about it, look at this. It keeps going. It's actually not 2,000, it is 89,522. So it's a lot of data. So it would have not made sense for me to try and scroll down all the way. Okay, so Control Shift down arrow, it selects the entire column. Okay, so that makes my work easier. So I will not need to scroll all the way. Let me do this quickly. If that automatically selects the correct range, then I can go back to the top. And if I press enter, the average of all these values is 12.9. Okay, so in very few strokes, you've been able to kind of analyze a lot of data. Remember, we've seen these are 80-something thousand records. So, but the average of all these quantities is 12.89. Okay, so suppose I wanted to do a sum of all these things that are in this column. I can still use the sum function equals sum. We've come across these simple functions before, so it's just a bit of a summary together with shortcuts. So if I do that, I am assured, I don't even have to check, I am assured that it has gone up to the bottom, but I've just used Control, Shift, and down arrow. Then when I come here, use the bracket, enter, then the sum of all this is 1,930,000 something. Okay, so that is another two things. One, a shortcut and a review of the sum function. Sum if we have just looked at, we have said sum if is a conditional calculation. So we are summing things that meet a certain condition. So suppose we wanted to use to sum things that where the quantity is, let's see what would make sense here. We want to count things where the quantity is above 20, for example. Okay, that's count if. Suppose we want to count the items, whatever these products were, products where the quantity sold was above 20. So we can do count if equals count if. So we're counting the products. So again, Control Shift, press down, select everything. We want to see categories where the sales were above 20. So I will lock that using the absolute referencing we talked about. Then I put a comma, then I will, this is what I want to count. Criteria where this is above 20. Now that introduces an interesting twist. See, in the other case, we were just counting things. There were marketing, there were departments, there were text. So how do we count something that is greater than, is less than? We have to use a formula. So we say greater than 20. It is counting. So I need to change this range actually. It should be, it is counting range D where the item is greater than, the number of items is greater than 20. So I've looked in this range, and out of these 89,000 and something products, 12,373 of them had a quantity of above 20. Okay. So it kind of simplifies. It would be a very hard thing to look through the list and determine the ones that are above 20, but the formula does it for you in a few seconds. So, looking at that again, I specify the range in where I'm looking and the criteria. So the criteria we've seen this time round, if we are talking about something that is greater than a certain number or less than a certain number, your criteria has to be in numerical form this way, but it still has the speech marks. So it is looking in this range for things that are above 20, right? Now, so let's walk through this one. Sum if, in this case, again, we can look for a field where we can sum. So suppose we want to sum with a condition. So we want to sum, yeah, there's this, if you look at the order number, there are different orders here. Let's use the order number. So suppose we want to sum the quantities just for the order number 53,993. Okay, that would make sense. So that equals sum if, then this is the range I'm looking at. So these are sorted, but in some cases they might not have been sorted. So then I want to use the criteria, this one. So the idea is I will sum those things that are, give me a minute, a second please. Sum if I was checking this range, the order number, and I'm using 53,993 as our criteria. And what am I summing? Let me sum the item totals or the quantity. Let me use the quantity. So I'll keep this open. Keep this, yeah, then I will do the item totals. So in this case, I just want this to be fixed. So I'll press F4, then I will get the total. Then lock the range, the center. So what it has done there, it has counted the total of the items that meet this criteria. So my criteria in this case, it is 5393. The order 5393, the total quantity of things is 171. The only problem is that it has again put some decimals. If I'm counting things, I probably don't want decimals. This has to do with formatting, which we looked at a bit of last time. You can reduce the decimals because it's just a number, it is not currency. So we use that and it gives me, it has given me the sum of these things. So these have been sorted, but in reality, sometimes they might all be mixed up. So you might need to pick them from different positions in that range. Okay, so that sum if. Count simply counts. So this one is not a complicated. If I just wanted to count how many items are in this range, if I use count, let's see if it will count for us. So it should give us the actual number of items. If I do that, press enter, it should give me the count of everything. So simply count the range. It tells me there are 89,521 items. Okay, so it has just counted everything in that range. Okay. Count A, on the other hand, count A is related to count, but count A specifically counts things that are text. Okay, so if I had now the names of people, let me see if I had some names of people in our initial, in the worksheet we were using before. Let me go back to it. So if I want to just simply count the total number of people here, then I can do equals, if I use count, see what will come through. Look at that. When I use count, it gives me a 0 because this is text. But for me to count things that are text, I use count A, count A. Okay, so it has the word count and an A at the end. So it is used for counting things that are not numbers. All this is different functions. Okay, so what I was doing here is giving you a bit of a summary of some functions. So what we can count in this worksheet is probably these things. These are the only things we can count using count A. If we did count A equals, and I did count A, then open a bracket, then I use this range, I expect to see the same number as this other one, because this time round here I was counting the order number, here I was counting the product description. Those two should match because one of them is the order number, this is the description of the same the item matching that order number. Small distinction there. Count only counts numerical values. Count A counts text. Now, I'll just do these ones quickly. Then I will not do VLOOKUP today. It's a relatively more advanced one, but I will do it at some point. But let's look at the if function again. So suppose I want to use the if function to come up with a name of the category. So those sales that are above 50, for example, I will call them high sales. And sales that are below 50, well, let's use 30, for example. Sales above 30 are high, sales below 30 are low. So I can use a function, an if function. So I'll do something like this, equals if this quantity is above 30 is what we have used. So if this is greater than or equal to 30, then this is high. Consider that a high sale. Else, a low sale. So this if function in this case has only two possible outcomes. So it has a condition. If that condition is true, it will write that. If the condition is false, it will write that. So I'm putting some two categories based on the quantity here. So if I do that and autofill, lots of things are below 30. Did I say 30? Or if it is equal, greater than 30, then it is high. If it is below 30, it should be writing low. Oh yeah, I'm using the quantity. This is what I'm looking at. So if you look at all these, they are below 30, then this 60 is above 30, it has written a high. Then I can even use another function to calculate, to count how many, suppose I wanted to count how many things are high sales. So I can use high sale number, some further analysis. High sale number. Then I can use one of the functions that we have already learned to count how many items had high sales. You can use equals count if, then I use this to select that range. Then the criteria there, I can say high. It can tell me how many had high sales. So it is 5,643. Okay. But if I just try to judge it by scrolling down, already it seems like there are too many low sales. But remember, these are 80,000 plus things. So it means out of those 80,000, there is about 5,000 of them that have the word high on them. Okay. So that kind of just reinforces the idea that a spreadsheet is very useful for working with lots of data that would be unrealistic for you to try and analyze as with your bare hands without an additional tool. Okay, so high sales are those, and I've used count if again. Okay, now that kind of summarizes the if function. The if function is used when you want to apply a condition to something. What I will end with is I will go back to this worksheet and just demonstrate one more use of the if function. I just use the if function here. Suppose these allowances remember we had a fixed figure. We say the allowance is just 20%. But in reality, sometimes the allowances are given depending on your income or depending on some other condition. Same as taxes. People are in different tax brackets and so forth. So we can apply some condition even when doing these calculations. So let's use an if function for the allowance. We will say people earning more get a bigger allowance, and people earning less and a small allowance. So this 20% will keep it for people earning below $1,500, and people earning above $1,500 will get, let's give them a little more, we give them 30%. Okay, so this allowance has two categories. There's two categories of the allowance. One group is getting 30%, another group is getting 16%. How do we include that in our calculation here? Now, we will hopefully make a recording of this available for you. I know sometimes it's too much to take in, but we will make this recording available for you at some point. So we say, because I want to use if to calculate the allowance, we're saying if this pay is above or equal to, we're saying 1,500, then the allowance is 30%. And it is 30% of what? It has to be 30% of this. You have to specify it, 30% of what? Then 20% of, so two conditions. If the pay is above 1,500, it is, the allowance is 30%. We have to specify of what. If I just wrote 30% without that number there, let's see what it would do. It will write 0.3. 0.3 is because we have not told it it's 30% of what. We have to say it is 30% of the basic pay. The other people who don't meet that criteria will be 20% of the basic pay. So if I do this now, I have used a conditional formula to apply to give allowances. It is not a blanket percentage for everyone. Okay, and we can use a similar thing. In reality, you might have different people being taxed differently depending on how much they are earning as their basic pay. So you will have that somewhere on a table, the different ranges of tax brackets. Then you can apply that conditional formula to work out the actual amount, right? So what I want to do is to bring it to a close. I had intended to spend part of this lesson purely talking about keyboard shortcuts, but I think we will have to do that next lesson. So in the next lesson, I will spend less time talking about new formulas and functions. I will spend more time focusing on one of the clear objectives listed on the syllabus is you need to learn some keyboard shortcuts. So in the next lesson, I'll be talking more about some additional keyboard shortcuts. Otherwise, that's quite a bit of Excel to take in. And thank you for being a good audience, and we will see you next lesson.
Welcome to Manifested Publishers. My name is Mr. Dongo, a PFT, Public Finance and Taxation lecturer. Today, we will be going through August 2024 paper. And we start with question 1. Question 1A, explain the following terms used in public finance management. 1 is the consolidated fund services, and 2 is what we call division of revenue bill. So we come put the question. So question 1, So A, explain the following terms. Explain the following terms as used in public finance management. As used in the public finance management. So one is what A is consolidated, what they call consolidated fund services. So basically when you talk about a consolidated fund, that all government revenue are basically kept in account called a consolidated fund, except the ones that are not approved by the Act of the Parliament. So basically when you say consolidated fund services, we basically mean, we say services means the expenses, we say the expenses means the expenses of which is charged, the expenses of which is charged directly, we say directly against, we say directly against the, against, and you say and payable from the consolidated fund, from the consolidated, we say the consolidated fund, we say under the virtue, we call it under the virtue of the Constitution, under the virtue of the Constitution, or any act, we say any act of the Parliament, any act of the Parliament, other than, we say other than appropriation, other than the appropriation. So that is what we call consolidated fund services. So services basically means expenses which is charged directly against and payable from the consolidated fund under the virtue of the Constitution or any act of Parliament other than the appropriation. So then we have the second, what we call division of revenue bill. Division of revenue bill. When you talk about division of the revenue bill, we're basically talking about how revenue is divided at the two levels of government. That is the national government and the county government. So this refers to it's a bill that aim at. It's a bill, we say it's a bill that aims at equitable, what do you call equitable? Equitable allocation of funds between two allocations to distribution of funds between two levels of the government, equitable allocation, or equitable, just say the word distribution, equitable distribution of funds between two levels of government, i.e. national and county government. So when you talk about division of the revenue bill, we are basically talking about how revenue is equitably distributed of funds between two levels of government, that is basically the national government and the county government, the national government and the county government. That is how basically we tackle that question 1A. We'll pick it on the next question. We say outline 5 purposes for which national government should borrow money according to the provisions of section 192 of the Public Finance Management Regulation 2015. So we put it down. That is B, question 1B. We say outline 5 purposes. Outline 5 purposes for which the national government should borrow money, according to the provisions of section 192 we say of the public financial management regulation. We call it Regulation 2015. So basically we are being asked by the examiner the 5 purposes to which national government should borrow money according to the provision of the section 192 of the Public Financial Management Regulation of the Public Financial Regulation of 2015. So basically, national government would borrow money for various purposes. One of it is to overcome budget deficit. One of the very common things about these developing countries, Kenya being one of it altogether, that is majority of the budget, most of the budget cannot be covered by the revenue. So one of the reasons is that they borrow to overcome a deficit. We also have another reason that we can talk about in case of emergency, so we can put them down. We have one, what we call financing the national, what we call the national deficit, financing what we call the national deficit. Deficit when expected expenditure is more than the expected revenue. The second is borrowing for the purpose, what we call borrowing for the purpose of the cash management, borrowing for the purpose of the cash management, borrowing for the purpose of the cash management, borrowing for the purpose of the cash management. Then we talk about honoring. Sometimes you find that the national government would borrow to pay back loans that are due. So we say honoring, what we call honoring, obligations, honoring obligations, under outstanding, what we call outstanding, under outstanding, national government, honoring obligations under outstanding national government guarantees. Then we can talk about the next, what we call refinancing, what we call outstanding debt, refinancing what we call outstanding debt, or repaying or repaying, what we call repaying or repaying a loan or repaying a loan to its, we say to its date of repayment. To its dates of repayment. Refinancing outstanding debt or repaying a loan to its dates of repayment. So they can also borrow. We can talk about the lastly borrow in case of emergencies. They can decide to borrow in case of emergency. These are basically unforeseen events. So basically this is the reasons that the national government will probably borrow in relation to the provisions of Section 192 of the Financial Management Regulation 2015. That is how we basically tackle that question. We'll pick it on the next question. We're being told Section 194 of the Public Finance Management Act of 2012 specify the functions undertaken by the Public Sector Accounting Standards Board. That is PSSB, Public Sector Accounting Standards Board. So with reference to the above statement, describe 6 functions. Describe 6 functions. We put it down on the board. So that is C. So we talk about section, we say section 194, section 194 of public, what do you call the public financial, of the public financial management, public financial management of the Public Financial Management Act, Act 2012, of the Public Financial Management Act of 2012, we say comma, specifies, we say specifies the functions, we say the functions, specifies the functions to be undertaken, we say to be undertaken by public sector, by the public sector, what do you call the public sector accounting, public sector accounting standards board, public sector's accounting standards board, into bracket, that is the PSSB, public sector's accounting standards board. So then you say with reference to the above statement, with the reference to the above statement, with the reference to the above statement, describe, we say describe functions of PSSB. Describe the functions of the PSSB, Public Sector Accounting Standards Board. So number 1 is to define, to understand what you mean by Public Standard Accounting Standard Boards, and basically their role. We need to understand that this basically comes from topic 3, that is oversight of the public finance. Public Sector Accounting Standard Board is one of the areas of oversight. That is basically one of the areas of oversight when you look at the Public Sector Accounting Standards Board. And basically in going through these questions, in going through this particular question, it's very important that one of the roles of this Public Sector Accounting Standards Board is basically to set what you call accepted accounting and financial standards. One of it has a role in the bid for oversight. We call it set. We say set. Generally, what do you call generally? Accepted set what you call generally accepted, set what you call generally accepted, accounting, accounting, and financial standards. The word is to set. The word is to set. Implementation is not the role, but basically is to set generally accepted accounting and the financial standards. The next we can talk about prescribing an audit procedure which basically comply with the PFM, what is the Public Financial Management Act. We say prescribe, 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 internal audit procedures, internal audit procedure, internal audit procedure, basically to prescribe internal audit procedure, which comply with PFM Act. So basically, it prescribes internal audit that basically will comply with what called Public Financial Management Act. So we can proceed to the next. That is the third point on that. We say that they set this standard. They don't implement, but basically they set the standard. So the next we can talk about prescribe the minimum standard. What you call prescribe the minimum. We say the minimum. What you call the minimum standard. What you call the minimum standard. Prescribe the minimum standard of what you call maintenance, minimum standard of maintenance of what you call proper books of account, of maintenance of proper books of account, minimum standards of maintenance of the proper books of account as the next role. Remember, they do the oversight role. And four, we can talk about what you call publish, what you call publish and publicize, publish and publicize, publish and basically publicize, and we say publicize the accounting, what do you call the accounting and financial standards and the financial, what do you call the financial standards and the financial standards, publish and publicize the accounting and the financial standards and any directives and any, what do you call, any directives, directive and directives and guidelines and the guidelines prescribed by the board. Prescribed by the board. What do you call prescribed by the board? So basically, publish and publicize the accounting and the financial standards and any other directive that is basically prescribed by the board. So we have the next, perform. We can say that is 5, that you say perform any other function. Perform any other function. Function, we say function related. Any other function related to advancing. What do you call advancing? Related to advancing. Prescribe any other function related to advancing. Financial, taking it higher. Financial and accounting. We say financial and accounting. Perform. This is say perform. Perform. We just rub it and write it clearly. Perform any other function This is, say, any other function related to advancing financial and accounting system management, and reporting in the public sector, and the reporting basically done in the public sector. So perform any other function related to what we call advancing financial and accounting system management and reporting in the public sector. And lastly, we say in consultation with the cabinet, secretary, on the effective dates of the implementation, in consultation with the cabinet secretary on the effective dates, that is cabinet secretary of finance, on the effective dates of implementation of the standards. We have not said they implement, but they consult on the effective dates of the implementation of the standards, and you say, comma, gazette the dates. We say gazette the dates for application, gazette the dates for the application of standards, and guideline. Again, very important for us to get to understand that when you talk about public sector accounting standard board, that's an oversight. So there are also various levels of oversight, that we basically have in relation to oversight. Also, various areas of oversight, apart from the public standards accounting boards. We have the internal audit as also an oversight. That's an area that can also be examined. So as you look at this, it's also very important to look at other levels of oversight. And I've talked about one as internal audit. And what is the role of internal audit? That is how we basically tackle that very question. We'll pick it up on the next question. That is question 1, Roman D, the last question on 1. So the question says, in relation to the public procurement and asset disposal regulation 2020, outline 5 methods that accounting officer or procuring entity or procuring entity may use to dispose the asset. So we have the question on the board. We say that is D. We say in relation to the public, what do you call the public? In relation to the public procurement, in relation to the public procurement and asset disposal, regulation 2020, regulation 2020, outline 5, we say outline 5 methods, that an accounting officer can we say use. 5 methods that accounting officer can use, that an accounting officer of we say of a procuring entity may use to procure, may use to dispose asset. May use to dispose asset. So when you talk about disposal, is how we do away with the asset. And when you look at this topic, that is basically topic 4 on procurement. So we are basically being asked that in relation to what you call the public procurement and disposal regulation, that is of 2020, what are the methods that that accounting officer of a procuring entity may use to dispose? To dispose basically is to do away with the asset. What are some of the methods that would basically be used to do away with the asset? One is, we call it a trade-in. We call it trade-in. What do you call trade-in? You know, you can have a new asset and you do away with the old asset. We call it trade-in. That is the first method that we dispose of an asset. So we move to the next. We move to the next. As we wrap this to the end. As we wrap this at the end. As we wrap this to the end. As we wrap this to the end. The next method that a procuring accounting officer of a procuring entity can use to dispose an asset, can basically use to dispose an asset. We talk about sell by public. What do you call sell by public tender? What do you call sell by public tender as another method that can be used to dispose an asset. Then you can also call number 3, what do you call sell? We say sell by public auction. What do you call the public auction? Sell by what you call public auction. Sell by the public auction. We also have what you call transfer. Another way for disposal, we say transfer. We can call it transfer to another, what do you call another public entity. Transfer to another public entity, or part, what do you call part of public entity, part of the public entity, with or without financial adjustments. With or without financial adjustment. With or without financial adjustment. We've talked about transferring to another public entity or part of public entity with or without what you call a financial adjustment. And lastly, what you call waste disposal management. What you call waste disposal management. Lastly, what you call waste disposal management. Waste disposal management. Very important for learners to understand that this is also a very crucial topic in the public finance. You know, we need to understand even the role of IFMIS under this, the roles of a number of things. For example, IFMIS in relation to procurement. What are the benefits of electronic procurement as opposed to a procurement that was basically being done physically? What is the role? Pre-qualification of tender. You know, what are some of the pre-qualifications that are required for tender, for the ones that are basically picked for tenders? Basically still touching on procurement. But particularly for this, you know, we were basically talking about a number of ways that an accounting officer in a procurement entity may dispose an asset. We've talked about trade-in. We've also talked about sell by public tender. We've talked about sell by public auction, transfer to another public entity or part of public entity with or without financial adjustment. And lastly, we've talked about what we call waste disposal management. That is how we particularly handle that last question. And that marks the end of the question 1. See you in the next class.
So how do we remove directors? And we talked about also the vacation of directors. So a director, either by death or their retirement by rotation. We talked about the time period where you can run for a director being in the articles. How many times you can be re-elected? If the number of years you have served as a director are as per you have reached your maximum, then you are removed as a director. We have the vacation of directors. And this is where the company, by ordinary resolution and before the expiration of the period of office, notwithstanding anything in its articles or in any agreement, we want to remove a director. A notice shall be sent to the director. A notice shall be sent to the shareholders that a meeting will be held to pass a special resolution. A special notice is sent to pass a special resolution to remove a director. So this director will be given a chance to be heard, and they will make their representations in writing and also notify the members that the company will notify the members that representations have been made. If they are not sent out, they'll be read out at the meeting. So we have effectively created a vacancy by doing that. Whether you see when it's death and the time frame has reached, that person has served their limit. Again, it's not voluntary. It has happened and other ideas will take place. But where we intend to form a vacancy by forcefully removing this director, we do a special resolution to do that. You're informed, you as Faith, that a special meeting will be held to remove you. And these are the reasons we are giving you. So you come with your presentations and say, why should you not be removed? And once we're able to remove you, this vacancy can be filled in the same meeting, or it may be filled as a casual vacancy. And you remember we said if someone fills a casual vacancy, they're eligible for re-election in the next AGM.
Welcome to Manifested Publishers. My name is Mr. Dongo, Public Finance and Taxation Lecturer. Today we are going to handle public finance paper that is August 2024, question 4. August 2024, question 4. August 2024, question 4. August 2024, question 4. So the first question, that is question A, explain the following terms as used in taxation. Explain the following terms as used in taxation. One is what you call duty drawback. Question 4A, Roman 1, is what you call duty drawback. What you call the duty drawback. So when you talk about duty drawback, we're saying means a refund. This basically means, we say means a refund. Means a refund of all or part, or we say or part, refund of all or part of any import, duty paid, duty paid, duty paid in respect, we say in respect of goods, in respect of goods, exported, in respect of goods exported, or used, we say used in a manner, used in a manner, used in a manner, or used in a manner, used in a manner, or for the purpose, exported or used in a manner, or for purpose, for purpose, or for purpose, purpose, prescribed, we say prescribed, prescribed, purpose prescribed, prescribed, as a condition, we say as a condition, as a condition, for granting duty drawback, for granting duty drawback, for granting duty drawback. So very important we say that when you talk about duty drawback, we basically mean a refund of all or part of duty or part of any duty of any import duty paid in respect of goods exported or used in a manner or for the purpose prescribed as condition for granting duty drawback. So the key word is refund of all or part of any import duty paid in respect to goods exported. So that is what you call a drawback. The second, that is A Roman 2, we have what you call sufferance, what you call sufferance worth, what you call the sufferance worth, what you call the sufferance worth, sufferance worth. So when you talk about sufferance worth, it basically means any place, we say means any place, other than, any place other than, any place other than, unapproved, what do you call unapproved, any place other than approved, approved place of loading, we say loading, or offloading, or offloading, loading or unloading, or offloading or unloading, any other than approved. So it means a place other than approved, a place other than the approved. Approved basically means the one that is recognized for loading and unloading, at which we say at which a commissioner, we say at which a commissioner, may allow, we say at which a commissioner may allow any good to be loaded, or unloaded, to be loaded or unloaded, to basically be loaded or unloaded. So then we have Roman 3. We have Roman 3, what we call import declaration fee. Import declaration fee. So when you talk about import declaration fee, this is basically paid to goods that are imported into the country, basically for home use. Goods that are imported into the country, basically for home use. So we can put it down and say that it is a fee. It is a fee on all goods imported, into the country for home use, into the country basically for home use. So we know that the amount payable is about 3.5% of the goods that are imported. But the keyword is basically when you talk about import declaration fee, it is a fee that is paid on all goods imported into the country for home use. So we can pick the next question, that is B, a calculation question. A calculation question that is on partnership. A calculation question on partnership, that is B. So the first thing we're being told that there is a Waka and Baraka started a partnership business in the year 2022, sharing profit and losses in the ratio of 5:3. So we have two partners, that is Waka, and we have Baraka, Waka and Baraka. So Waka and Baraka, the ratio is 5:3. Then this should be ratio of 8:5. Then this should be 3:8. That is the sharing ratio. That is basically the sharing ratio. So we're being told that the following is a statement of profit or loss for partnership in the year ended December 2023. So we're looking at sales. We know that sales, that should be a taxable income. General bad debts recovery, that is a non-taxable income. We have anticipated foreign exchange gain. When you talk about anticipated, those are not realized, so that's also non-taxable income. We have capital gain on the sale of land. Again, that is a non-taxable income. That is a non-taxable income. Then you have insurance recovery on stolen vehicle. When you talk about insurance recovery, basically on a stolen vehicle, that is also basically what you call a non-taxable. That is what we also basically called a non-taxable income. Then release of liability. When you talk about release of liability, then that is a taxable income. Release of a liability is a taxable income. Then you have interest from Ulinzi Sacco. When you talk about interest from Ulinzi Sacco, that is an investment income. So that is a non-taxable income in relation to the business. And we know that interest from SACCOs, we call them qualifying interest, where we're saying that the 15% withholding tax is final, and therefore we do not subject them to further taxation. Then we proceed to the expenses part. When you talk about the expenses part, we have the purchases. We have purchases, which is an allowable deduction, allowable expense or allowable deduction. Then you have purchase of computers. We call purchase of computers as non-allowable. Purchase of fixed assets are not expenses in taxation, so that is a non-allowable expense. We have repairs expenses. When you talk about repairs expenses, those should be allowable expenses. We have legal and professional fee. So on the legal and professional fee, we basically say that legal and professional fee can be allowable, and at the same time it can be non-allowable. However, if an examiner brings a question on legal and professional fee and there's not an additional information, then that legal and professional fee should be allowable expense. The next is what we call rent and rates. Rent and rate, that should be allowable expense. Then interest expense, we say that interest on partners' capital, that is non-allowable. However, interest on loans borrowed, that should be allowable. So we can look at the additional information. General expense is allowable expense, provided there's no additional information saying something contrary. Motor vehicle expenses, that should also be allowable expenses, provided there's no additional information saying something contrary. Then we have the insurance, that should also be allowable expense, provided there's no additional information relating to anything. Then we have what we call welfare expenses. Welfare, basically, if you have welfare for employees, that should be allowable. Then we have audit and accounting fee. Audit and accounting fee, that should also be allowable expense. Then we have computer softwares and programs. That is a capital expenditure. So capital expenditure, those should be non-allowable expense. Then lastly, we have traveling expense, a figure of 64, that should be allowable expense. So if you look at the totals and we minus from the incomes, the accountant basically got a net loss of 2,750,000, and this needs to be adjusted as a tax person when now we talk about in terms of tax. So additional information, we have legal and professional fee. total was 816. Out of that, there is a legal and professional fee, the first one, that is legal fee on defense against alleged breach of trade contract. When you have legal fee on defense against alleged breach of contract, those should be allowable. Those are allowable expenses. The next is legal fee on tax appeal. That is a non-allowable, so that needs to be added back. That is a non-allowable expense, which is in the P&L. We need to adjust it by adding it back. We have legal land conveyance fee. Land conveyance fee is also what we call non-allowable expense, so we need to add it back. Stamp duty is also non-allowable legal fee. We also need to add it back. Then negotiating a business loan. When we have legal costs that we incur to negotiate a business loan, that we also say that is also non-allowable legal cost. Then we have recovery of bad debts. Legal fee that relate to customers and debtors, that is allowable. That is an okay expense. Then we have signing 100 years lease agreement. When you talk about lease agreements, renewal and signing of leases, if leases are below 99, then those ones should be allowable. However, if leases are above 99 years, like the one we have in this particular question that says 100 years, then that should be a non-allowable. Then we have purchase of private or partner's private vehicle. That is a private expenditure. So purchase of a partner's private vehicle as a legal cost, that should be non-allowable expense. Then the last one on the legal fee, we have what we call legal fee on renewal of patent. Renewal of patents, that should also be non-allowable expense. So done on additional information 1. So additional information 2, we have repairs expenses comprised of the following. The first expense that relates to repair, we have the purchase of furniture. When you talk about the purchase of furnitures, those should be non-allowable expense. When you talk about the purchase of furnitures, those ones should also be non-allowable expense. We have what called designing and partitioning of a new block. Designing and partitioning of a new block, that's also a capital expenditure, so that is a non-allowable expense. Then lastly, we have what we call repainting of an old office block. That should be allowable. So that one we don't adjust by adding back. So we move to the to additional information number 3. Additional information 3. So we are told that impairment, 1 is impairment of patent, general expense. Impairment of patent, that should be non-allowable expense. If the impairment of patents, that should be non-allowable expense. Then we have provision for general bad debts. Provision for general bad debts, that's a non-allowable expense too. We add it back. Then we have drawing of goods by partners. Drawing of goods by partners, we know for sure that those are non-allowable expense. So additional information number 4, that gives us to our working 1. We can call it working 1. So on the working 1, we're being told that purchases and sales were inclusive of VAT at the rate of 16%. Taxes paid or taxes refunded. Taxes paid are not expenses. That one we need to understand. The taxes paid are not basically expenses. So tax paid are not expenses. Again, we need to understand that tax refunds or tax that are basically on incomes, those are non-allowable. And we need to adjust the taxes on sales by lessing, the taxes on expenses by adding back. So we say that purchase and sales were inclusive of VAT at the rate of 16%. So we have the first one, that is purchase. Purchase, the figure for the purchase is 3,706,000 was inclusive of VAT. So that implies that this was 116%. So what is the VAT that we need to add back that were on purchases that understated the profit? Remember the VAT, we say VAT on purchases understates the profit. So correction is correction, add back. So we get that VAT. So say 16 over 116 times 3,706,000. 3,706,000. 3,706,000. If you look at that, we have 16. We have 16 over 116 times 3706,000. So we have the figure is 511,172. 511,172.4. We round it to all numbers. So with this one, we are going to add back. Add back. So then we have VAT on sales, just on that VAT on sales. So we have the figure for the sales. If you look at the figure for the sales in this particular question, the figure for the sales is 5780. That inclusive of sales, that should be 116%. So what is the VAT on sales? We know that the VAT on sales basically overstate. VAT on sales, we know that VAT on sales overstates the taxable income. The VAT on sales basically overstates the taxable income. So we need to understand that the correction is to deduct. The correction is basically to deduct. So if you say that 5780, 5,580,000 is equals to 116%. What about that VAT that we need to deduct? VAT, which is 16%. So that should be 16 over 116 times 5,780,000. 5,780,000. So we have this. So that is 16 over 116, then times 578. So that should be that VAT that we need to deduct. That is 797,241. 797,241. 797,241. 797,241. So then we get to the next additional information. Working two. We're being told the closing inventory was valued at 120. So 1.2, sorry, closing inventory value. So the closing inventory value is 1.2. The figure is 1.2. That is the closing inventory value. The figure is basically 1.2, while the opening inventory was valued at 10% of the net sales. At 10% of the net sales. So we can get the value of opening stock. The value of opening stock. So the value of the opening stock was valued by 10% of the net sales. Net sales basically means net of value added. So the sales we have, if you look at the sales is 5,780,000. This is 116. So net of sales, that should be 100%. So net of VAT, net of VAT. So net of VAT, that should be 100 over 116 times 5780,000. So sales net of VAT, we have our calc, and we say that 100 over 116 times 5780. So what do we have? We have a figure that's 4,982,000, 982,000, and then we have 982,000. Then we have 759, 982,759, rounding it to all numbers. So with that we have the net sales. So the opening stock was basically, we were told that the opening stock is basically 10% of the net sales. So opening inventory, we have the opening inventory in that particular question, 10% of the net sales. That's 4,982,759. When you get 10%, there should be 498,275.9. So the opening inventory rounded off to all numbers should be 498,276 to 9. 498,276. That is basically the opening stock. that is basically the opening stock. So we're being told that opening stock and the closing stock were both undervalued. Both undervalued. Opening stock and closing stock. We say undervalued at 10%. So we start with the opening stock. So this figure, 498,276, is undervalued by 10%, meaning it is 100 less 10. So this is 90%. So what is the undervalue, which is 10%? This is what you call the undervalue. So the undervalue that is 10% should be 10 over 90 times 498,276. For 498,276. So we get the undervalue, which is 10 over 90 times 498,276. So the figure is rounded to all number. That should be 55,364. So when you have 55,364, when an opening stock is basically undervalued, what is the correction? When an opening stock is basically undervalued. Let's have a practical example. We have SP sales. We just say sales 2,000. A practical example, sales 2,000. We have purchases 1,000. We have opening stock 400, and then we have the closing stock 500. So to get GP in this, particularly on this, so we have this and this. So we have sales, that should be 2,000. Opening stock 400. Purchases 1,000. Then we have closing stock 500. So when that happens, we have 900. And so we know that when you have 900 there, the gross profit in that case should be 1,100. So if the opening stock in this case is undervalued, let's say we undervalue by 100, 300. What is the implication? What is the effect of undervalue of 100? So that would be now 300 plus 1,000 minus 300 plus 1,000, that is 1,300, minus 500, that is 800 now here. So we have the gross profit rising. So when an opening stock is basically undervalued, the correction is to deduct. It overstates, since it overstates profit. Deduct since it overstates the profits. So basically the correction is to deduct since that basically overstates the profit. So the opening stock that is undervalued of 55,364, that should basically be deducted. Then closing stock, we can have the closing stock here. Closing stock at this point. So the closing stock is a figure of 1.2. That was also undervalued by 10, so that's 90%. So the undervalue is 10%. So that should be 10 over 90 times 1.2 times 1.2. When we basically do that, so we have 10 over 90 times 1.2. So the figure should be 133,333. So 133, we have 333, two whole numbers. So when closing stock is undervalued, the effect is that it understates the effect that is it understates, so we add it back. So it understates the profit, so the correction is to add back. So the correction is basically to add back. So we read the last additional information. Interest include, so the interest, we have a figure of 160 in the paper. The figure is interest. When you talk about interest expense, 166. Interest expense include interest on partners' capital of 120, which was shared according to the ratio. So interest on partners' capital is a non-allowable expense. So we need to note on that additional information, number 6, that 120 is a non-allowable expense that needs to be added back. But you're saying that under what you're going to take under partners allocation, income allocation schedule, we are going to share this interest on capital based on the ratios. So we can have this working as sharing of interest. Sharing of interest. Interest on partners' capital. Partners' capital. So that's as we call it, we're working through there. So we have worker. That should be, worker is 5/8 times 120. Then we have Baraka. Baraka should be 3/8 times 120. 3/8 times 120. So we get those figures. So 5/8 times 120. So that should be 75. And we are taking them to income allocation schedule. So the other one will be 3/8 times 120. So we have 45. That's okay. We have that as 45. So that marks the end of those additional information. So required. We are told that compute the adjusted taxable profit of partnership for the year ended 31st December 2023. So that is the first Roman A, B Roman A. So say you worker and Baraka partnership, worker and Baraka partnership. Taxable, what do you call adjusted taxable profit? What do you call adjusted taxable profit for 2023. And we need to understand, because we've been provided with accounting profit, we need to understand that we are going to use the net profit. So we'll say we have this shillings on this. Then we know that in this particular question, we have been provided with an accounting profit. So we use what we call the net profit method. So say accounting loss stroke profit provided. So based on what was done by accountant, it basically said that this business made a loss of 2,750,000. So then we say add back non-allowable expenses in P&L, non-allowable expenses in P&L, then taxable, we say taxable incomes not in P&L, and taxable income not in the P&L. So when you look at this, when you look at basically what you have, so we start with the P&L, that is on the expenses. So we have the non-taxable, non-allowable expense that we have for the first one in the P&L, less expenses. We have purchase. We have what we call purchase of computers. We have the purchase of computers. So that's a figure of 216 that needs to be added back. 216. Then we have the next on that P&L. We look at the repairs, no legal fee. Just on that computer softwares and programs. We have computer softwares and programs. and programs. So that should be 1.2. Computer softwares and basically programs, that is 1.2. So then we have the first additional information that we have on legal. So we say that legal fee on defense against alleged breach that is allowable. Then legal fee on tax appeal. We have legal fee on tax appeal. Legal fee on tax appeal, that should be 64,800. Then we have land conveyancy fee, what we call the land conveyancy fee. So the land conveyancy fee, that is 72,400. 72,400. We also had stamp duty. We also say that stamp duty, that should be 36,600. That is a stamp duty. We can have the last one. Negotiating a business loan. What do you call negotiating on this? Negotiating a business loan. That's also non-allowable. Negotiating a business loan, that should be 25,400. That should be basically 25,400. So I hope this is able. This is very visible as we look at that. So because of some entries that we need to have there, and then we have that. This entry we can wrap that we need to add back. That is VAT on purchases. That is basically VAT on purchases, 511. We need, as we wrap it, we need to put it there. So we have VAT, another item, VAT on purchases, on the purchases. That is 1,511,172. So we go on with where we had signing 100 years lease agreement. So say signing 100 years lease agreement. Signing 100 years, that is more than 99. That should be 128. So we have 128,400. So then we have the next, that is purchase of partners. That is a private purchase of partners. We call it partners private vehicle. Purchase of partners private vehicle. That is a private expenditure. That is 137,400. We have that. Then the last one, we know that legal fee on renewal of patent. Legal fee on renewal, what we call renewal of patents. Legal fee on renewal of patents. So the legal fee basically on renewal of patent. Legal fee on renewal of patent. On renewal of patent, we have a figure of 126. That's a figure of 126. We can clear what you have. We know that we have that figure at the back of our mind. 7. We need to understand that we have it as 797, 241, so that we don't go doing the working again. So then we proceed to additional information number 2. We knew that the purchase of furniture is also non-allowable. That should be 260. Purchase of furniture. Then you have designing and partitioning. What you call designing and partitioning. What you call partitioning of new office. Designing and partitioning of a new office. That's also a capital expenditure. That should be 341. So that is also added back. And that is okay. So we move to the third. Impairment of patent rights. That's non-allowable. What you call impairment of patent. What you call patent right. Impairment of the patent right. We have a figure of 120. That's also need to be added back. Impairment of patent right. Then provision of general bad debt, also non-allowable. Provision of general, what you call general bad debt, bad debt. That should be a figure of 208,000. We add that back too. Then we have the last one, drawing of goods by partners. We have drawing of goods, also non-allowable, goods by partners. Drawing of goods by partners. So that should be equivalent to 314. 314. Having a figure of 314. 314. Then purchases, we knew that we needed to add back VAT on purchase because that's understated the profit. On the sales, we are going to less. So we're still looking at what items that we need to add back. So we proceed to opening and closing stock that were understated. We know that what we need to add back is closing stock understated. So we say closing stock understated. We say understated. The closing stock that is understated, that should be 133,333. 133,333. Then we have the last one, that is interest on partners' capital. We call it interest on partners. We call it partners' capital. Interest on partners' capital. The figure is 120. Interest on partners' capital. The figure is basically 120. So these are the items that we need to add back. What is the total of those items that are needed to be added back? We have 216. We had it 216,000 plus 1.2 down there, plus 64,800, plus 72,400, plus 36,600, plus 25,400. We have that. Then plus 511,172. 511,172 plus 128,400 plus 137,400 plus 126 plus 126 plus 260 plus 260 plus 341 plus 120,000 plus 208,000 plus 314,000 plus 133,33. Then lastly plus 120. So the figure is 4 million. The items that we need to add back, 014,505. That is 4,014,000 and 14,505. So we go to less. Less, we know that we less non-taxable, taxable operating incomes in P&L, comma, investment incomes in P&L, investment income basically in P&L, and what to call and allowable expenses not in the P&L, not in P&L, and allowable expenses not in P&L. So what are we lessing? Non-taxable operating incomes in P&L, investment income in P&L, and allowable expenses not in P&L. And when you talk about allowable expenses not in P&L, this is basically the investment allowance, because we do not have deposition in taxation. So we move to those items. We look at the incomes. So the first one is general bad debt recovery. So we have general bad debt recovery, general bad debt recovery, general bad debt recovery. So that should be 75, the item that we need to less. Then we have anticipated, what we call anticipated foreign exchange gain. Anticipated foreign exchange gain, 180. anticipated foreign exchange gain. Or anticipated foreign exchange gain. So we look at that as we So as we rotate that camera to that very hand, because of we have that. So then on those incomes, we also have capital gain on sale of land, what they call capital gain on sale of land. Capital gain basically on the sale of land, that should be 352,000. Capital gain on the sale of land, that is a figure of 352,000. Then insurance recovery, recovery on stolen vehicle. This is recovery on fixed assets, so that's also non-taxable, that is 320. An item that we also need to less. We have release of liability is taxable. We have now interest on from Ulinzi, what we call Ulinzi Sacco. Interest from Ulinzi Sacco. Interest from Ulinzi Sacco. So Ulinzi Sacco, we know that that's a figure of 34, and that is qualifying interest. So we don't subject it. We do not take it to the income allocation schedule. So then we move on those incomes. We are sorted, but we know that VAT on sales, that was basically overstating profit. VAT on sales we had 797,241. We noted it up there. Then we have the next item, that is opening stock understated. What we call opening stock understated. So the opening stock that was basically understated, that is 55,364. Then we wrap this and move to the investment allowance. Opening stock understated. So as we wrap that, we now move to allowable expenses that are not in the P&L. So that is basically investment allowance. And this is, to be precise, wear and tear. So we can have the first one. We know that we have computers, We have computers. Those should be under investment allowance at the rate of 25. So that times 25% times 216. The investment allowance on that, 25% times 216. 25% times 216. 25% times 216 times 216. So that should be 54. Then we have the next. On the next was computer softwares. We have computer software. That's also 25% at the rate of 25%. That is 1.2. 1.2. That should be 300,000. That should be 300,000. 1.2. That should be 300,000. And then we have what we call, we have furnitures. Furnitures, we know 10%. Furnitures, we know that should be 10%. So furniture, we had on the furniture that was 260. If you look at that furniture, furniture was 260. So that is 10%. Furniture times 260 times 260,000. That should be 26. The investment allowance. Then we have partitioning. The partitioning figure was 341. We know that partitioning is also 10%. So times 10%, that should be 34. What do you call 34,100? So these are the items that we need to less. So we can get the summation of items that we need to less, so that we get the adjusted taxable profit or a loss. So I have 75 plus 180 plus 180, then plus 352 plus 320 plus 34 plus 797, 241 plus 55, 364, then plus 54 plus 300,000 plus 26 plus 34,100. So this gives us what we have as 2 million. So we have 2,227,705 as items that we need to less. So we have the adjusted, what we call the adjusted, but A adjusted, taxable profit or loss for the business. Adjusted taxable profit or loss for the business. So we have a loss, a negative of a negative 2, a loss which is that is a negative. So that is negative 2,750,000 plus 4,014,505. So when you had that, then we less, again we less 2,227,705. So what do you have? Adjusted taxable loss of 963,200. That is adjusted taxable loss of 963,200. So when you adjust it, they got it, accountant got this, but as we adjust, we know that the loss was basically 963,200 using the principles of tax. Adjusting that, we have a figure of 963,200. So then we can proceed to the next part. We can proceed to the next part. The next part we've been told, allocation of profit or loss. So that is B. We can have that B here. What we call allocation of profit or loss. We stretch as we rotate the camera. We stretch as we rotate to have it on a clean slate. That is basically on this other end, to have it on a clean slate. We have it on the clean slate, but we can just have it on that end. We can just have it on this end. We know that this can be enough. So we have Waka, we have Baraka, we have Baraka, and then we have totals here, and then we have totals on that end. So what do we start with? We start with items that we need to add: interest on capital. So interest on capital, there was a 120 that we were able to divide. The 120 that we were able to divide, as we rotate that camera, we can look at where we did the division or working. That interest on capital was basically 75 for Waka, and Baraka was 45. So we get back and have 75 on this. We have 45 on this. So then now we have a figure of 120. And then we have a figure of 120. Then we have a figure of 120. So then we proceed to the next. Is there salaries to partners? There's no salaries to partners. Is there interest on drawing? There's no interest on drawing. Is there bonuses to partners? We do not have that. So we have a column here. We call it the share of profit. We hold it. Share of profit. We hold it. Share of profit stock loss. Stock the loss. Share of profit stock the loss. We have taxable, operating profit or loss for business. Taxable operating profit or loss for the business that we got from our working. That is basically 963,200. So we have that. So we look there keenly. So this one we call it A. We call this one B, sorry. This one we call B, and this one we call A. And sometimes for this particular question, we were simply having one item, that is the interest on capital. So how do you get the profit of share, which is C? C should be B minus A. So the taxable operating loss. So if you have a loss of 963,200, and then you minus 120. So when you minus 120, we mean that there's a loss that needs to be shared. That loss is 1,083,200. How are they sharing it? As I do the working here, how are they sharing? I do the working here as the commenter is being rotated. The ratio is still the same. Even that loss is supposed to be shared. So we have worker, and then we have Baraka. Worker is having 5/8, and the total loss, as we rotate that, the total loss is 10,83,200. So how much loss goes to Worker? Then Baraka is 3/8, 10,083,200. How much loss goes to that? So we get that. So times 5/8. So the loss that goes to Worker, that should be 677. That should be 677. The loss that goes to Baraka, that is 10,083,200 times 3/8. So the loss that goes there, that should be 406. This should be 406,200. So we have that loss that basically goes to this. So this should be 677, 677, 677. Then we have 406, 406,200. So what is the taxable operating income that goes to Worker? We remember, under partnership, we do not tax partnership, but we tax basically individuals that are in partnership, So 75, which is a positive, minus a loss that is 677. So what do we have? We have a loss that is 6, that should be 602. That should be 602. That is, and that we also have a loss. The loss is bigger than the positive value. So if we take 45, so the loss basically decreased to 361, 200. So add, we just say add other taxable investment income. We do not have those investment income. There's none. So then we just wrap this again. We get the total taxable. We wrap that to get the total taxable income. Total taxable income. So we have Worker, Baraka, and then we have the total. The figure remains the same. So that is 602. That is a loss. That should be 361,200, which is a loss. So the total loss we know is 963,200. When that is added, 963,200. So we cannot, in the first place, we cannot tax even these persons because they're making a law. They're making a loss. In the first place, we cannot tax partners. The partners, we say we do not tax partnership, but we tax individuals that are basically in partnership. That is how we basically tackle that question. That is question 4. But again, a point of essence, when you're doing these particular questions on calculation, remember it's the entries that count. So a student needs to be very careful and make majorities of entry. I always say that if you can make 75 to around 100% of the entries, you stand a better chance of doing very well in this calculation. And also just to encourage that these calculations are doable and that the perfect way is that students can basically score marks. That is how we basically sort that question 4, and that marks the end of the session that we have. See you in the next session.
If you remember last time, just for a bit of a recap, last time we looked at some new functions. We talked about, I think it was the choose function. We talked about ifs and average ifs. Just quickly running through this, we said and use the count ifs and some ifs to do some conditional calculations. The average ifs third question. Okay, that's good feedback. So I'll have a look at that quickly. But just for the sake of, I can see Lazy, I'm not sure you were there last time, but what we looked at was this functions, count ifs. So we said it works a bit like the count if function, except that you're able to add multiple criteria and multiple ranges. So like in this case, it asks us to count the number of female students. So that's our criteria. We just follow this wizard here. So it says we want criteria range, and this is where we will get the information from. So we select that range, and what is our criteria? We are looking for students. We have said you must type it in the same case. It appears. So it tells us there's 183 females who completed a test prep. Let's quickly run through this again. Count ifs. Count ifs. Bracket. So we will be using two fields there. So let's use the gender one first. And the criteria for the gender is females again. And then we can put the second criteria range. If we go to the question, it says who completed a test prep. So the field that shows us who completed is this one. We can select that. And then the criteria for that is detailed. Also remember to put the speech marks, all right? So that's okay. Then you can quickly, that you get the hang of it. I don't want to go through all of them. Let's just do two of some ifs, because this is not the main focus for today. Some ifs, and open a bracket, I didn't need to read the question. Total reading points scored by students who received standard lunch. So we have want total reading points scored by students who received standard lunch. We want to get students who received standard lunch, and where do we get that from? We look for lunch, select that. The criteria for that is standard. Then the sum range. Okay, we have done it the other way around. This one starts with the sum range. Sum range is it reading? Reading points. So we'll go to reading. Get that from up here. Of course, the cover after that. So we have followed this. This is sum range. This is a criteria range. There's then standard. Press enter. Let's see, total reading points scored by students who received standard. That should be correct. So we have sum range, criteria range, and criteria range 1. That's correct. Let's try the second one. Total reading points scored by students who did not receive standard lunch. That means other students. So we can still use some ifs. Then the sum range is still reading points. So we go to reading points. Take this to the top, reading points. Then criteria range is the same criteria range for lunch. So there are only two options. There is free or reduced. So the criteria for this will be free stroke reduced, just the way it appears on the worksheet. I should get some number there. Although you realize you can also get this number by subtracting from the total number. So when I look at the data there, those are the only two options. So those are two for that. Let's try average ifs. Okay, let's see, not using a pivot table. Show the average total score for each parental education level. Let me look at that data again. Parental education level. So this requires you to use a subtotal. Let's see subtotal. So we want to average, to group this data by parental education level. Let's see if we can quickly do this. Functions. Seeing what I'm looking for. There's an option for subtotals. Anyway, let me look into that, then I'll show you. What happens is you group the data, so it gives you summaries for each section. So it would group each, it would have groups of data based on the parental education level, which I think is this one here. So all this high school people would be clustered together. Some high school people would be clustered together. Then for each of those subtotals, for each of those sections, it will give you what we call a subtotal. And the subtotal would be, you choose what that subtotal would be, either the total marks or the count of people in that. So it will give you some calculation based on the groups, right? So it should be a subtotals function, which I'm not seeing here. All right, I'll double check that and advise by the end of this. So that's, if I can quickly go through these two for the benefit of the person who was not here last time. So average if was average use. Want here average math score for female students who completed a test. So it's basically like the same one we did up there. Average math score. So we do the average range is the math score. Then comma criteria range for students who did not do what, who completed a test prep course. So that should be, this is the criteria range. That's the criteria range. The first criteria should be those who completed. Center. All right, so then of course we said you can reduce the decimals and increase them using this. Then let me see, average score by student not in ethnic group A and whose parents have a master's degree. So in all other ethnic groups except for A, and whose parents have a master's degree. Let's see how that would look like. So that would be average use bracket, and the average range, it is the average total score. So total score is here. Then criteria range 1 should be ethnic groups. Then criteria range, the criteria is, let me try this. Let's see, this should be, you can do group A, or not group A, rather is what we're looking for. So it should be all other groups. There's a group D, group All right. I could do some calculation here. Let me see. So if I want to get the average for the people not in group A, that means I'm excluding group A. So let's try this first of all. Let's just try this first. Let me put group. It should be a more efficient way of doing this. Group C. Then I can use the same criteria range to select the same group. Right, this should be group B, then group C. Criteria range 2, same criteria range. And this time I select criteria 2 would be C, and so forth. So I can repeat the same thing for all groups. I suspect there is a more efficient way of doing this. I do not think you have to repeat this every time. It looks like we are we're making reference to the same criteria over and over. So if I'm doing that, I can just copy this. And just change to change this to group D. And I would have to do that for all of them. So I have data, just checking this if this is correct. So that's the average range. This is the criteria range. This is criteria range 2, the criteria range 3. It should be criteria range 3. So it should match this. Just copy this again. Paste that and change this to group D. Should be correct now. Then I have the last one. Paste that and change that to group E. Then I can do the last criteria, which was whose parents have a master's. So that would be the new criteria range. Would be the new criteria range. Which, because I'm looking for a criteria range, and it is this one. Not the criteria is masters. It is telling me something about group D. All right, let me go through this again so we don't take too much time on it. I think there should be a more efficient way of doing this that does not require us to do all the formula. So I'll go through that, and it's the first thing I will look at when we get back on Monday. But today I had wanted us to focus on the PMT and the IPMT formula. Then from there we can, in the next session, I can do this present value and net present value. But let's talk about PMT. It's a pretty straightforward concept. So if you look at my screen here, I've started by explaining what PMT is. It is short for payment, okay? And it is a financial function commonly used to calculate the regular payment amounts required for loans, mortgages, or any other financial agreement involving periodic payments. It helps individuals and businesses determine how much they need to pay for each period. So think of it like when someone takes a loan, there are some monthly payments. Usually they will be monthly, but in other cases, there could be cases where somebody is supposed to pay every 6 months, but generally it could be, most loans you'll be expected to pay some amount at the end of every month. Okay. There are certain other payments where which we'll discuss, where you're supposed to make a payment at the beginning of every period. That period could be a month or the beginning of the year, but usually most payments are due at the end of some period. So that is a description of what it is. So in other words, if you have a mortgage, you're supposed to pay for, let's say, 10 years. What this PMT function helps you do is compute how much you're supposed to pay every month for that 10-year period, taking into account the interest and so forth. Okay, so I'd gone ahead and done some calculations here, but I'll repeat them just to illustrate how it works. So this is a PMT function. So if I can use the same, let me just calculate here, monthly payment. So this is the same amount here, but I'll go step by step. So equals, then of course I'll start with PMT. It's an Excel function. So the rate, this is the interest rate. So in this case, the interest rate is 6.57, but the thing to note, like in this case, this is the annual interest rate. You need to turn that into the monthly interest rate. And you can guess that you'll do that by dividing this by 12 to give you how much the interest rate for every month. So we are done with the interest. Okay, the rate. Then there is this NPR. It is a number of payment periods. Okay, so I think I did even not take a note here through what I'm calling components of the PMT function. So the first one is the interest rate, is a percentage charge on the loan amount, which affects how much you pay in total. So this percentage, for most loans, it will be quoted per annum. So you need to convert that to the monthly rate. Then the number of payments. This is the total number of payment periods for which the loan will be repaid. Okay. Now, when we talk of payment periods, it depends on how many times you're expected to pay. Like in this case, the loan will be repaid. There's an amount that will be repaid every month. Okay. So when we say this here, if you look at this column, it is the length of the loan in years. This one here. So if we pick that, it is not accurate in terms of the number of payment periods. This is the number of payment years, but because we are paying every month, we need to multiply this by 12 to show the number of months over which we will be repaying the loan. Okay, I hope this makes sense. Okay, so the multiplication by 12 is because we will be paying 12 times every year. So it is 12 times every year for these 35 years. Then present value, PV, it is the total amount of the loan, like the current value of that loan. In this case, the loan amount was this. Excuse me. Then there is some optional, they're called arguments here, like this future value and type. Type here refers to whether you're paying at the beginning of the month or at the end of the month. And we have said for most cases, you pay at the end of the month. So we will not enter anything for that section. And future value, it is an optional component representing the desired cash balance after the last payment is made. We do not want to have any balance at the end of the period, so we will leave it at 0 in this case. There are instances where we will put some numbers there, but it's a calculation for another day. So if you look at this, we get our figure. This matches what I have there. So it's a pretty straightforward concept. We know for us to pay this over 35, or rather over 35 years, we will need to pay, although here I'm indicating it in, I think the currency has changed to Kenya shillings. Let me just return it here to dollars for consistency. And usually you'll notice it shows a negative value because it is money that is going out. So in the context of the person paying, it is an outflow. It goes, it is money that they're giving away. So it is why it is regarded as negative, right? It is not income, it is some expenditure. So the same would apply for all these other calculations. So if you look at this, I've followed the same procedure just to quickly run through it again. PMT is short for payment. So we say we start with the rate. We have to convert it to the monthly rate by dividing by 12. So again, we are making the assumption that for most loans, you're supposed to repay every month. If it was a loan where you're supposed to pay some amount every quarter, then this would change. This would be the payment period, or rather the rate would be, you'd have to divide this by 4 if you're paying every quarter. And the payment periods would change. This would also be every quarter if you are paying quarterly. Yeah, if that makes sense. So that would impact the amount of you're supposed to pay every quarter. If you look at it, it's a bit of a larger amount, right? So I hope this is clear. Let's try IPMT. IPMT is also a pretty straightforward concept, and it's what I have put here. IPMT looks almost similar, almost the same, but it is the thing with IPMT. The difference is IPMT is for calculating out of this amount that you're paying, which how much of it will be the interest. Okay, so you'll be paying this much, but the interest out of that, this will be the interest. Okay, let me use this other worksheet to calculate that. So I'd also, it looks like I'd also done some calculations here. So we have a loan amount. I'm assuming this is dollars. So we have a loan amount, and the interest rate is 6, and the number of payments is 12. This is over 1 year. Okay, so you're paying this amount over 1 year. So monthly payments, this one we have calculated using the PMT function, which we have just worked out. So PMT, we said it has rate. So you have 6% every month. Then you have number of payments. In this case, it will just be 12. Then we have this value, the current value, center. It gives us the amount that was there. So which is the same calculation that has been done. But the question is, out of this 21,516, how much of it is the interest? That is where this IPMT function comes. If you look at it, it looks almost the same. You look at the arguments, the parameters that go into it, they're almost the same, except for one here, which we call the period. Okay, so we have the rate, the period, the number of periods, then the current value, right? So let's try working it out here, one step at a time. So we'll start with IPMT. IPMT. Okay, so it's interest payment. So the rate in this case is that divided by 12. Remember to divide it by 12 because there will be, that's the monthly rate. The period, so it is for each period. In this case, the current period is this, the first payment. So the period is referring to, if it is, if you think about the previous example where we talked about somebody paying a loan or a mortgage for over 35 years. So the period being referred to here is each of those payments, each of the 35 times 12 payments. So each of the monthly payment is what we will be calling the period. So then the number of periods, again, in this case is 12, right? Then the present value is 250. Okay. So then these other ones are optional. We will leave them out for now. And if we do that, we'll get the answer. Again, my system wants to work in Kenya shillings. Let me just check that. Then, if you recall from our other discussions, if I do this, I'll get some errors. And if you remember from our earlier discussion, that error is coming because our cell references are changing. If I look at this, the rate was on E7. If I look here, the rate has gone to E8, which is clearly wrong. If I look here, it probably have gone to E9 and so forth. So if you recall from our first lesson, when I want this to remain on that, we will use absolute reference. So I've done a function F4 because I'm using a laptop. Function F4 to lock that on 6%. So it will just add those dollar signs around the E. Another field I want to lock is the payment, the period. This period, I want this to change as I go down. So the period should change to 2, 3, 4, and so forth. But the number of payments, because I'm reading this from here, I'm getting this directly from this block of values. I want that to be fixed. So let's see. This is changing. This is changing. I want E8, this figure, to remain fixed. So I'll do function F4. And the loan amount also should remain fixed. Then I do function F4 and I press enter. Then it will work as it should. Yes, it is working, right? So remember, those absolute references, very, very critical. If you forget this, it ends up being a bit disastrous because it will not work out the correct values for the rest of the out of field range. So we have fixed this on 6% because we don't want that to change. We have left this open. It's called relative reference because we want that to change. And we have fixed the number of payment periods because we want it to just refer to this 12. Otherwise, if we wanted it to remain fixed as well, we could type the 12 here to still do the same thing. But as we agreed not to type in numbers inside the formula unless it is absolutely necessary. If I type the 12 there, it would still give me the same answers. But because we have said our convention is not to type this here, we click on it and then we do function F4. Then of course the payment, the loan amount should also remain fixed. Okay, so out of each of this is the amount the person will be paying per month, and out of this is the 1,250 will be the interest. Okay, so by the end of that time, they will have paid 2,500 and rather 258,000, and out of that 8,199 will be the interest. So if you look at it, it kind of makes a lot of sense. The original amount is 250. The amount they will be repaying will be 258,199.29. So if you take this amount and subtract that, it should just give you that interest, the amount of interest, right? So I hope this makes sense. So it starts getting a bit more technical when we start doing financial functions, because you kind of need to understand the theory behind it. Otherwise, it won't make much sense. But these are easy enough to understand. You take a loan of this amount, you want to pay over a 12-month period, then you need to pay 21,516 every month. If I change this, let's say I want to pay this, instead of having the number of payments, I have like the number of years when I want to, so let's say years instead. I want to pay this over 3 years. Let's say this was, okay. That will affect everything, because when we make this 3, then we need to make this, it is no longer a month, so we need to multiply this by 12 for it to be really to represent the correct number of payment periods, rather the correct number of payments, right? So we have adjusted this to 3 years. Let me see how that affects this as well. This also should be affected, so that should be times 3 as well, times 12. Okay, let's see what else could change. So 6% per annum. I'm trying to see, I'll just change this to years. So I want to see whether it makes sense. So we have the rate, that's correct. The number of payments will be 3 times 12, and the current value will be the same. So I'll be paying, then this will change. This will change here. See, this one is 12. I was wondering why this is 91. Then I would have to increase this to go all the way to cover 3. Within the first year, you'll have paid 91. But if I want to represent the 3 years, this needs to go all the way to 36. Then you will get the correct answer. So let me have that as 36. Then I would need to copy this down all the way. And I can do my sum here, equals bracket. Then I would do sum rows. Then it should give me that amount. And then I can do the same here. Copy this formula down. Let's start from up here. And if I get the sum, okay, so I can see it still makes sense, because 273, if I pay this over 3 years, of course I'll pay a larger amount of money. I'll pay 273 in total. And out of that 273,000, 23,797 will be interest. So of course, because I paid for a longer period of time, I will pay more money, and if you look at the numbers, they add up. I started with 250, I have paid 273, so that includes an interest of 3,000, right? I hope it's all making sense. So what I want to do is not to overwhelm you with too much information. So today we have looked at 2 functions. Okay, if I can go back to where I had my notes. PMT, it is short for payment. It is a function that is common. It's used to calculate regular payment amounts required for, it could be loans, it could be mortgages, or any financial agreement involving periodic payment. So that periodic payment is an important statement, because it is not necessarily all the time. It is common for you to pay every month, but there could be instances where you pay every quarter. So you need to keep that in mind when you're doing the calculation. So it helps individuals or businesses to determine how much they need to pay for every period. So, for example, monthly, it could be quarterly, or whichever payment period you would have agreed with the lender or whatever we are talking about in this case. So PMT calculates the monthly payment. IPMT calculates what the interest is out of that monthly payment. Okay, so if we use the IPMT in this, just as a conclusion, IPMT formula in this case, we said it includes, still include rate. We divide that by 12 because there will be to get a monthly interest rate. And in this case, they were paying over 35. No, we would need to get the period. Like in this case, it would be period 1, period 2, and so forth. Okay, so if the period was period 1, meaning like the first payment, then the number of payments here would be times 12. It's 11 times 12, then the present value would be this. So the first amount you pay for interest will be this. For me to get the second amount, I would need to change this to 2. Then it will change as I go. By the time I finish the 35 years, this should be like at the end of the first year, this should be 12th payment. At the end of the second year, this number will be 24, and so forth. So you'll see how the interest is reducing over the period of time. Right. So I hope that is clear. So today we kind of we move on from where we were. We will do a bit of a recap and as well learn a few new functions. And I also want to spend a good section of this lesson specifically focusing on shortcuts, giving you a summary of several shortcuts as we learn new content as well. So I'll share my screen. So what I have here is a simple worksheet. So we will use this to do a bit of a recap of some of the things we have already learned, but as well we will use it to learn a few new things. So we'll talk about percentages, for example. You're familiar with addition, subtraction, and that type of thing. But we'll introduce percentages, we'll introduce some simple charts, as well as go through some conditional formula. Okay. So here I have a simple spreadsheet with some data. We could take this as employees of a small company somewhere. Okay, so I can rename this. Remember we said we can rename worksheets, so I can call this employee data, basic data. So what we want to start with is remind ourselves how we do percentages, or even before we do that, this looks rather plain, so we can do some formatting. Okay, so I want to first highlight that row, make it look better by making a title row bold. And also, I can move this out of the way and make this whole section, for the whole section I apply some visible borders. So what I've done there is used the home tab, then I went to this border option and selected all borders. All borders applies borders to everything. So then I can also do some color coding for this section, which is what we will be focusing on. So I can put some soft green color there. Maybe the title all needs the same color. Let's make that dark red and make the text white. Okay, so it's starting to look more interesting. Right, so that's just a bit of formatting. So let's start with the allowance. We want to, this is some data about some people. Okay, there are some people in different departments. We have their first name, their staff ID. So what we want to work out is an allowance based on a percentage that we've been given. Okay, so we'll say these people get an allowance. Let's say it's a blanket allowance to start with. They all get 30%. And this basic pay, I know the numbers look small. Let's say this is basic pay in dollars. They're being paid in USD. So suppose the allowance everyone gets is 30%, or let's make it 20% of their basic pay. How would we compute that? What formula would we use? Remember from last lesson, we said you need to remember a bit of your basic maths. So if we are getting 20% of 1,500, we will start with an equal sign like we start for all Excel formula and functions. Then we'll say 20%. So the good thing with Excel, there is a percent sign. So that is shift and 5. There are those of you who will want to do the long maths and do 20 over 100, which is the same as 20%. But because you're using Excel, you can do shift and the 5 key, so it will pick the percentage sign. Then for the times, remember it's shift and 8, then you want 20% of that. And remember, like from last time we said, we don't type the 1,500, we click on it instead. But because 20% is a constant in this case, we type it. So if I do that, I'll get this first person will get an allowance of 300, and we'll get some numbers there. It went beyond the range, so I want it only going up to here. Okay, so I've used autofill. You remember autofill from last lesson. So you just click on the board, on the cell that you're interested in, then point at this corner, okay, bottom right of the cell you've selected, then pull it downwards and you will autofill the formula. In other words, you will copy the formula to all the other cells. Okay, so which reminds me, suppose this constant, we wanted it, suppose it was given somewhere here. Let's say we had it in a cell here which said allowance, then there was 20%. So we want to read it. So somewhere already listed on the worksheet you're working with. Okay, so we have something like that. Let me increase the font a bit so you can see. Suppose it was already stored somewhere, then they stored the tax as well. The tax, let's say, is 35%. So it is all already on the worksheet indicated, the rates. So how can we use this here? Okay, let's think about that for a moment. For now, we have just been typing the percentage directly and has been working by copying this value multiple times. And if I go down this, you can see the cell reference is changing. This is changing. It started at E2, moving on. Okay, but the 20% is remaining constant, which is what we want to happen when we click it from here. So for example, let me just use an example to illustrate what I'm saying. Suppose this was not here, and we wanted to calculate it based on this formula. So we want to do something like that. Click on this 20, then times this 1,500. If I press enter, the first answer looks very correct. Okay. The only challenge will come when I try to copy it downwards. Okay. So if you remember, this reference has been changing as we go down the selection. You see what's happening with the Ks. We started at K4, which is what has that 20%. For the second one, it goes to the 35%. It's referring to K5. And you'll notice from here, it becomes zeros because there is nothing here. It is the default value there is 0. Then by the time it gets here, it will even generate an error because it will try to do K14. K14 is the one that has that. So how do we make it stick to that 20? Okay, then here we use what is called absolute referencing. Okay, it's one of those shortcuts. For you to get the absolute referencing means we will lock the 20%. That cell reference will not move down. So we could do it manually by typing the dollar signs like this. Okay, so if I type those dollar signs, you'll notice it will work out the correct figure. So in other words, as I click down this range, you will notice that K4 is remaining constant, which is what we want to happen. So an alternative to typing those manually is to use a shortcut. If I highlight this K4 and press F4, the F4 key on your keyboard. If you're using a laptop, you might have to do function F4. F4 are those function, or rather, when I say F, I mean the function keys at the top of your keyboard. It starts with the F1 all the way up to F12. On the machine I'm using, it goes up to F12. So when I press F4, it applies the absolute reference, and then that range will be locked. Right? So that's an important thing to remember. So suppose tax, let's use the same method to work out this tax. We want to start with an equal sign, click on the range, and we can press F4 at that point now that we know how to work with F4. Okay, 5, yeah, I have the right one. And F4, then we put a times, and then we click on this. But let's make it even more interesting. Suppose we are taxing even the allowances. We want to apply the tax to the allowances as well. At this point, we're only taxing the basic pay. So it gives us that. Let me erase this part. But we want a formula that will tax even the allowances. So we will have to do odd mass, we call. So I will need to add those two. So I've done that last sign, then click on this, and this will be 35% of the sum of those two. Does that make sense? So I've done E plus F, that gives you 1800, and we are getting 20% of that 1800. All right. So that's one way to do it, but you could also use a sum function. Just a bit of a recap of what we have done. If I put sum here and highlighted those two, you still work. So still get the same thing, only that here I've used the sum, and it, at first glance, it might look like a very intimidating formula, but if you understand the logic of it, then it makes sense, because sometimes you will need to include the sum of a given range and get some percentage of it. So it wouldn't make sense for you to go adding all the values one at a time, like we've done before. If you had 10 values to add, the more concise way of doing it and the more efficient way of doing it is using sum function, which we looked at last time. But we'll do a summary of the formulas in a short while. So we have, this is how we are working out percentages. Okay, we've looked at two ways. You could write the percentages directly into the formula, or you could have them somewhere on the side. Then the computer or the Excel, the spreadsheet, will pick them directly from the range where that rate is indicated, right? So suppose if we think of things like VAT rates, different rates of different things. You can have the rate indicated in a specific portion of the spreadsheet. Then you will just need to click on that position, and then you will apply it, include it in your formula. Now, the net, let's do the net. This is simple math. So we will add the all income, everything that is coming in, then subtract the the taxes. So we will need to do the sum of those two minus the tax. One way to do it is just do it directly, that plus that. Then you say minus this, and we have an answer. So it keeps highlighting all the way because I have some data there. So I will move this down. So we've looked at percentages. Yeah, it's not a very complex idea. We have also done a bit of a recap on formatting, and I've used the sum function here at least once. So these are things that will keep popping up. Now, a bit of some more formula. Let me move this out of the way. Some more formula. We now want to do a small analysis of this data that we have here. We want, for example, to count the number of people, get some data out of this spreadsheet. This is just a small sample. Suppose we had a spreadsheet with 1,000 people. We could be counting the number. We could do a bit of a summary of the data by getting the number of people in each department, maybe average age, if we had some age column here, average pay, and so forth. So let me bold this one, and I can merge and center this section. Okay, so merge and center is something we've not mentioned. It is used to merge several cells. So I want the whole of this section to be called analysis. Then I can bold, or rather I can apply some borders to it, so it looks more presentable. Okay, you can do all sorts of things in terms of formatting. So I think what we'll do is we'll take one of the lessons and just focus on formatting, because it's an important aspect of this. All right, so we want to count the number of people in marketing. Count the number of people in marketing. Based on the functions we learned last lesson, can anybody remember any function we can use for this? We want to know the number of people in marketing based on this. We want to use a function that will check this place, and then it will give us the number of people here. Anyone remembers? Can post something on chat or say it out loud. So that would be the count if function. So we want equals count if. You remember we say these are conditional formulas. We want to check this range, select range. Nice thing is that it also gives you a prompt there. So we want to check that range. And what are we checking for? We're checking for something called marketing. Whenever we are typing text, we have to include speech marks. So if I do that, it will tell me from that range it is finding two people in marketing, right? Now there is a temptation to pull this down, to just autofill this. If I do that, then obviously there's something wrong with that data. The way to tell what is wrong with it is to actually look, if I move this out of the way and looked at the formula that is giving me this, the first one is doing the right thing, which is checking range D2 to D13, which is the range I want, for the word marketing. If I go to the second one, it has moved to, it is checking the range D3 to D14. Okay, so it has moved one step down, and it is still looking for marketing. So I need to update two things. I need to update the range. So it takes us back to the idea of absolute reference. So I want this range to be fixed where it is looking for these things, right? So I need to apply absolute referencing to that section. So I will highlight it and then press F4, right? So that fixes one of the problems. So now if I autofill this one, I'll get 2 all through, because it is looking in the correct range all through. but it is looking for marketing all through as well. So I need to update what it is looking for. So I can do that quickly by just typing in what it is supposed to look for. For this section, it should tell me how many people are in cleaning, how many people are in HR, how many people are in IT. So I'm just updating the criteria for what it's supposed to be looking for. Then there will be sales. Sales. Then we have support as the last one. So what you notice, this is linked to this. So if I change any values here, so for example, if I have more people, let's say I switch, let me change one person from support, and let me just, or let's change from cleaning and let's call it support. You'll see, we'll update that. So there's no longer anyone in cleaning, they're now called support. Okay, so same thing, if I updated one of these sales to HR, the data will automatically pick the change. So there will now be 3 HR, and there will be less, the one I reduced, less sales, right? So I didn't have any age here, so I will leave this out, or I can quickly, actually it's part of what we can do. Suppose we wanted to insert age here. We already have these columns. How do we add a new column? How do we insert a new column? We can insert a new column by just right-clicking just after where we want, or where we want the new column. I want a column here called age, so I will right-click there and insert. Then I get a blank column and I can say age. Then I can put some random figures. Let me just pick some random numbers. 33. So all these people working for that company. The organization it is. We have a few people above 40, a few people in the 20s, and so forth. So we can decide to include that in some kind of analysis. So suppose we want to get the average age of people in marketing. For whatever reason, we want to collect some bit of demographic information. So we can use a function we used last time. So we can use average if. Okay. So we are looking at a department, then we will average the age. Let me switch this to. It does look like the numbers. It will look more natural if I switch this. Yeah. So notice what I've done. Let me just repeat that exercise. Suppose I wanted to swap this. What I've done there is selected this, copy, Control C, and I've just gone where I want it and done that. I used this, right-clicked, and insert copy the cells. Okay, then I will need to delete this. So what I've done there is insert copied cells. The only problem that creates is the range for this now becomes wrong. So I need to reselect this. So let me do this quickly. So I like that the range was this. It was, I needed to press F4. That should fix the formula. Okay, back to what we were doing. We were trying to, no, it doesn't fix it completely. I still have the problem of needing to change this. Let me use a shortcut for this. I can use this. So it will check for K16 there. This will check for sales. I'm using absolute reference even for this section. In other words, even this, it will just look for support all through. NIT, instead of typing it there, I just reference it this way, and then I press F4 so that it will look for the whole range for the same thing, amounts, correct numbers, right? So we were trying to get average age. So we kind of updated our worksheet here to include age. So what we want to do is to get the average age by department, right? So we will need a function for that. We will use it's called a conditional function again. So we will do equals average if. Okay, so, and you will notice this one has 3 variables we need to insert there, 3 parameters. Okay, so we want to check here. We are looking at this section, and we are looking for people in marketing. So we want again to fix, let's just fix this. Remember that thing we talked about, absolute reference. We can do it right now so that we do the absolute reference this because we will be using the same range all along. Then we press that, then click on marketing, or we could write marketing, but let's go with clicking on it. So it will be looking at that range, searching for marketing, and what will it be averaging? So if you look at that, the template that was there, it asks us the average range, which is this thing here, average range. So in other words, say where you're looking, what you're looking for, and what we'll be calculating. Okay, and then we want this also absolute with an absolute. So if I do that, it gives me an average age of 30.5 for people in marketing. So if I look at those 2 people, it's 28 plus 33. What it has done is that it has added those 2 and divided by 2. Okay, so just to review that formula a bit, let me zoom it in, the font a bit so you can see it better. If I did that, then move this a little bit. So it is average if. This refers to the range where I'm getting the category of people I'm looking at. I'm looking at the departments, and then what am I looking for? This is a specific department I'm looking for in this range. In the range D2 up to D13, I'm looking for. This was referring to marketing. Sorry that I've not written the name this time round. Then this is what I am averaging. This E2 to E13 is where I am doing the calculation. So it has 3 parameters: the range where I am looking, what I'm looking for, and the calculation, the range which I will use for the calculation. Average if, and it works very similarly to sum if. If we wanted, for example, to get the sum, how much you're spending on each department on pay, yeah, we could include a sum here. But we can include that here. Let's just add it here, sum or total for the department. So you spending pay for that department. Okay, but let's do average first. Suppose we wanted average pay. It's very similar. It's only that this time we will be doing the pay instead of the age. So if I already have the formula here, one thing I can do is just copy the formula over. Okay, you will notice it just writes 30.5 because everything here is frozen. So it is looking in the same range, it is looking for the same thing, and it is averaging the same thing. The same thing here is, if you look at that, that was the age. It even highlights it here. So what we want to do is to change that last one to, let's say we are averaging the net pay. It's just that last range I will change. And again, use F4, press enter, then it will tell me the average pay for those. For this will be, the first one will be correct because it's for marketing, But if you notice, we have not changed this, so it will be doing marketing all through. So we have to remember to update this one as well. Where it is looking, the criteria. So we need to do this, light it, click on this support, and so forth. So the one way I could have avoided this is to could have copied everything across. So if I did this, let's see, we had done K15, we had updated this. Anyway, let's quickly update this one. Control Y. Okay, so let me change this to not fix this. Yeah, I'm thinking through this formula. I think I don't need to fix this one. I want it to change as I copy it downwards. So I will do that and it will give me the right fix now. So what it is doing, let's see if this is correct. So it has checked in K15. This one has checked in K16. This one has checked in K17, and it has checked in K18, K19, and then there is no one in cleaning, so it is not finding any data. It has not found anything called cleaning. Now, we don't want this to happen. So we can improve our formula to avoid seeing hashes. We can use if there is no result, then we get a 0 or something like that. But that will complicate the formula. But we can modify this to apply what is called error handling. Like if it is there's an error, then it puts a 0. You can use something called if error. Then we say 0. Now that makes the formula rather long, but what it does is this is what we are using, but we are saying if this generates an error, it will put a 0. Yeah, that's what it does. It's used for error handling. If there is an error in this formula, it will put a 0 instead of having those hashes, or you can have another form of error message, right? So what I want to do is to copy this across. So with spreadsheet questions, sometimes you have to do some thinking, even when you know it very well, like we have just discovered here. I was freezing this range, which I think I didn't need to. I wanted it, ideally it should be changing. As I scroll down, it should be moving from this one to this automatically. So that saves me the work of typing the departments. I can type marketing, then type support. It makes it a very long process. Let's see, I'm too fast. Eh? All right, I will slow down, Joroge. So what I would say is this average if, did you understand? I hope you understood what average if does. Average if calculates the average of a given range, but based on a condition. So like we are getting the average age by department. That is why we are using average if. We are not just getting the average of the whole set of data. We are getting the average by department using some criteria. Average pay, we will be getting, again, the average by department. So we will still, in this case, use average if. So let me repeat the average if. I see, that's correct. Okay, so average if. So I'll start with an equal sign, right? So average if, I will just write the function, right? Then I will look at this prompt here, or this template tells me to provide a range. Where am I looking? I'm looking at the department. So I have fulfilled that first criteria. Okay. Then to make this, to lock this range, because I don't want this to change. I want to look in the same range every time. I press in on my computer, because I'm using a laptop, I will press FN. FN is a function key somewhere at the bottom left of the keyboard. Then that will allow me to select the function keys up at the top of the keyboard. But that is only for a keyboard. If you're using a desk, or rather for a laptop, if you're using a desktop, you might not need to press the function key. So it will have a slightly different format, that keyboard. But I imagine most of you probably will be using a laptop. So it will be FN, then F4. You hold down the FN key at the bottom, F4 at the top. That locks the range. Then we said for this range, you don't need to lock. Then what am I averaging? This time round, I am doing the net pay. Okay, so this is the average range, the range I need to do the calculation on. So I can quickly run through that. I am looking here. This will have the list of departments. This will tell me what I'm looking for, the K15. Then I will get the average. When I find marketing, do the average for marketing. When I find support, I do the average for support. Again, I want to lock this. So FN plus F4, and I get my figures here. The formatting, again, I need to make this 16. Now this division by 0 is an error, so I can use error handling to cover that. Because there is no cleaning, what it is doing is, because it's an average, average is, it will take the total number of items, then divide by the number of items there are. So in other words, it will count, there is 0 cleaning people, but then it will divide that by 0. And if you divide things by 0 in maths, you get an error. So what I will do there is apply some error handling. So notice I'm not changing the formula too much. I'm just adding, if there is an error, then what will happen? I'll put a comma here at the end, and I will put either error or 0. You could even write the word error if you want to do it. But we don't want appearing, let's just say 0. Because the average pay is 0 if there's 0 people. That is. Or you can have any other error message. If I did this, I'll get the word error. Okay, so hope that makes sense. So if error sometimes is quite useful for coping with any unexpected things happen. Okay, so I can either put an error. For example, if somebody entered, instead of entering an age here, they entered something like 29. So if they did that, then probably it will have a problem calculating, although in this case it has not generated any error. It would, in other cases, you can tell that this has changed. Something has changed here because it has not taken this text into account. So it is 28.5 in reality because it cannot calculate using text. All right, so that is a bit of a few more functions. I've gone through average if again. So we had said we can do sum if. The logic is the same. Suppose we want to get the sum of the pay by department. Okay, so it's same logic, except that this time around we are doing the sum. Okay, so these functions, I know they start getting a bit more intimidating as you go along, but once the logic of it clicks, then you will see it's not a very hard function. So what we want to do is to tell how much are we paying the people in marketing, how much are we paying the people, how much are we spending on the people in IT. Okay, so it's kind of a realistic analysis what we want to do. So I want to do sum if this time. Okay, so I'm still looking at departments. Then I will do the Fn and F4 to lock that range. Then what am I looking at? I'm still looking by department. Okay, then I will put a comma. And what am I summing this time? Still the net pay. So we want to know in total how much are we actually spending on these people. So I lock that range and I close the bracket. So it will give me the totals by department. So let me increase the font of this. And it will tell me marketing people, we spent 3,003. Let's see. Oh, that is these two figures. I was looking at this and wondering. Which says, so it is this plus that. Because we have used the net range. Support people, we have spent in total 8. Let me copy this down. We spent in total 1,794. So in other words, it has looked for support. It has added that to that. Give me the sum for that department. Okay, so it's a very useful function depending on what you're trying to look for. Very useful function for summarizing data or analyzing data. So that's a few more functions. What I wanted to do also here is, let's see. So what I wanted to do is to also use some other set of data to talk a little bit more about, just summarize the functions and the formulas some more. Let's look at a different set of data. So suppose I had this data here. Okay, this is a long set of data. I can use it also to do some of the same things. So this is a summary of the different formulas, some of the ones we did last time. So you know how to, this is addition, subtraction, multiplication, and division. So quickly running through that. Addition, suppose we wanted to add quantities, we said this one we just add directly or subtract. So this one we will not dwell on. Subtraction, you just use a minus sign. But average, again, suppose we wanted to get the average quantity. These are it's a very long list. What I wanted to use this to show you also, suppose I had a very long range to select. If I do this, and I want to get the average of all these figures up to the bottom, this spreadsheet has about 2,000 different records. So one way I could do it is drag this down up to the bottom, keep going all the way up to the number 2,000, which is quite a long journey. So what I'll do instead is, on the keyboard, I'll hold Control and Shift. Control and Shift down, then I press the down arrow. Control Shift down arrow. So that's a shortcut. It selects the whole range. If you think about it, look at this. It keeps going. It's actually not 2,000, it is 89,522. So it's a lot of data. So it would have not made sense for me to try and scroll down all the way. Okay, so Control Shift down arrow, it selects the entire column. Okay, so that makes my work easier. So I will not need to scroll all the way. Let me do this quickly. If that automatically selects the correct range, then I can go back to the top. And if I press enter, the average of all these values is 12.9. Okay, so in very few strokes, you've been able to kind of analyze a lot of data. Remember, we've seen these are 80-something thousand records. So, but the average of all these quantities is 12.89. Okay, so suppose I wanted to do a sum of all these things that are in this column. I can still use the sum function equals SUM. We've come across these simple functions before, so this is just a bit of a summary. together with shortcuts. So if I do that, I am assured, I don't even have to check, I am assured that it has gone up to the bottom, but I've just used Control, Shift, and down arrow. Then when I come here, use the bracket center, then the sum of all this is 1,930,000 something. Okay, so that is another two things. One, a shortcut and a review of the sum function. Sum if we have just looked at, we have said sum if is a conditional calculation. So we are summing things that meet a certain condition. So suppose we wanted to use to sum things that where the quantity is, let's see what would make sense here. We want to count things where the quantity is above 20, for example. Okay, that's count if. Suppose we want to count the items, whatever these products were, products where the quantity sold was above 20. So we can do count if equals count if. So we're counting the products. So again, Control Shift, press down, select everything. We want to see categories where the sales were above 20. So I will lock that using the absolute referencing we talked about. Then I put a comma, then I will, this is what I want to count. Criteria where this is above 20. Now that introduces an interesting twist. See, in the other case, we were just counting things. There were marketing, there were departments, there were text. So how do we count something that is greater than, is less than? We have to use a formula. So we say greater than 20. It is counting. So I need to change this range actually. It should be, it is counting range D, where the item is greater than, number of items is greater than 20. So I've looked in this range, and out of these 89,000 and something products, 12,373 of them had a quantity of above 20. Okay. So it kind of simplifies. It would be a very hard thing to look through the list and determine the ones that are above 20, but the formula does it for you in a few seconds. So looking at that again, I specify the range in where I'm looking and the criteria. So the criteria we've seen this time round, if we are talking about something that is greater than a certain number or less than a certain number, your criteria has to be in numerical form this way, but it still has the speech marks. So it is looking in this range for things that are above 20. Right? Now, so let's walk through this one. Sum if, in this case, again, we can look for a field where we can sum. So suppose we want to sum with a condition. So we want to sum, there is this, if you look at the order number, there are different orders here. Let's use the order number. So suppose we want to sum the quantities just for the order number 53,993. Okay, that would make sense. So that equals sum if, then this is the range I'm looking at. So these are sorted, but in some cases they might not have been sorted. So then I want to use the criteria, this one. So the idea is I will sum those things that are, give me a minute, a second please. Sum if, I was checking this range, the order number, and I'm using 53,993 as our criteria. And what am I summing? Let me sum the item totals or the quantity. Let me use the quantity. So I will keep this open, keep this here, then I will do the item totals. So in this case, I just want this to be fixed. So I'll press F4, then I will get the total. Then lock the range, the center. So what it has done there, it has counted the total of the items that meet this criteria. So my criteria in this case, it is 5393. The order 5393, the total quantity of things is 171. The only problem is that it has again put some decimals. If I'm counting things, I probably don't want decimals. This has to do with formatting, which we looked at a bit of last time. I can reduce the decimals because it's just a number, it is not currency. So we use that and it gives me, it has given me the sum of these things. So these have been sorted, but in reality, sometimes they might all be mixed up. So you might need to pick them from different positions in that range. Okay, so that's sum if. Count simply counts. So this one is not a complicated. If I just wanted to count how many items are in this range, if I use count, let's see if it will count for us. So it should give us the actual number of items. If I do that, press enter, it should give me the count of everything. So simply count the range. It tells me there are 89,521 items. Okay, so it has just counted everything in that range. Okay. Count A, on the other hand, count A is related to count, but count A specifically counts things that are text. Okay, so if I had now the names of people, let me see if I had some names of people in our initial, in the worksheet we were using before. Let me go back to it. So if I want to just simply count the total number of people here, then I can do equals, if I use count, see what will come through. Look at that. When I use count, it gives me a 0 because this is text. But for me to count things that are text, I use count A, count A. Okay, so it has the word count and an A at the end. So it is used for counting things that are not numbers. All this is different functions. Okay, so what I was doing here is giving you a bit of a summary of some functions. So what we can count in this worksheet is probably these things. These are the only things we can count using count A. If we did count A equals, and I did count A, then open a bracket, then I use this range. I expect to see the same number as this other one, because this time round here I was counting the order number, here I was counting the product description. Those two should match because one of them is the order number, this is the description of the same the item matching that order number. Small distinction there. Count only counts numerical values. Count A counts text. Now, I'll just do these ones quickly. Then I will not do VLOOKUP today. It's a relatively more advanced one, but I will do it at some point. But let's look at the if function again. So suppose I want to use the if function to come up with a name of the category. So those sales that are above 50, for example, I will call them high sales. And sales that are below 50, well, let's use 30, for example. Sales above 30 are high, sales below 30 are low. So I can use a function, an if function. So I'll do something like this, equals if this quantity is above 30 is what we have used. If this is greater than or equal to 30, then this is high. Consider that a high sale. Else, a low sale. So this if function in this case has only two possible outcomes. So it has a condition. If that condition is true, it will write that. If the condition is false, it will write that. So I'm putting some two categories based on the quantity here. So if I do that and autofill, lots of things are below 30. Did I say 30? Or if it is equal, greater than 30, then it is high. If it is below 30, it should be writing low. Oh yeah, I'm using the quantity. This is what I'm looking at. So if you look at all these, they are below 30, then this 60 is above 30, it has written a high. Then I can even use another function to calculate, to count how many, suppose I wanted to count how many things are high sales. So I can use high sale number, some further analysis, high sale number. Then I can use one of the functions that we have already learned to count how many items had high sales. You can use equals count if, then I use this to select that range. Then the criteria there, I can say high, it can tell me how many had high sales. So it is 5,643. Okay, but if I just try to judge it by scrolling down, already it seems like there are too many low sales. But remember, these are 80,000 plus things. So it means out of those 80,000, there is about 5,000 of them that have the word high on them. Okay, so that kind of just reinforces the idea that a spreadsheet is very useful for working with lots of data that would be unrealistic for you to try and analyze as with your bare hands without an additional tool. Okay, so high sales are those, and I've used count if again. Okay, now that kind of summarizes the if function. The if function is used when you want to apply a condition to something. What I will end with is I will go back to this worksheet and just demonstrate one more use of the if function. I just use the if function here. Suppose these allowances, remember we had a fixed figure. We say the allowance is just 20%. But in reality, sometimes the allowances are given depending on your income or depending on some other condition. Same as taxes. People are in different tax brackets and so forth. So we can apply some condition even when doing these calculations. So let's use an if function for the allowance. We will say people earning more get a bigger allowance, and people earning less and a small allowance. So this 20% will keep it for people earning below $1,500, and people earning above $1,500 will get, let's give them a little more, we give them 30%. Okay, so this allowance has two categories. There's two categories of the allowance. One group is getting 30%, another group is getting 16%. How do we include that in our calculation here? Now, we will hopefully make a recording of this available for you. I know sometimes it's too much to take in, but we will make this recording available for you at some point. So we say, because I want to use if to calculate the allowance, we're saying if this pay is above or equal to, we're saying 1,500, then the allowance is 30%. And it is 30% of what? It has to be 30% of this. We have to specify it, 30% of what? Then 20% of, so two conditions. If the pay is above 1,500, it is, the allowance is 30%. We have to specify of what. If I just wrote 30% without that number there, let's see what it would do. It will write 0.3. 0.3 is because we have not told it it's 30% of what. We have to say it is 30% of the basic pay. The other people who don't meet that criteria will be 20% of the basic pay. So if I do this now, I have used a conditional formula to apply to give allowances. It is not a blanket percentage for everyone. Okay. And we can use a similar thing. In reality, you might have different people being taxed differently, depending on how much they are earning as their basic pay. So you will have that somewhere on a table, the different ranges of tax brackets. Then you can apply that conditional formula to work out the actual amount, right? So what I want to do is to bring it to a close. I had intended to spend part of this lesson purely talking about keyboard shortcuts, but I think we will have to do that next lesson. So in the next lesson, I will spend less time talking about new formulas and functions. I will spend more time focusing on one of the clear objectives listed on the syllabus is you need to learn some keyboard shortcuts. So in the next lesson, I'll be talking more about some additional keyboard shortcuts. Otherwise, that's quite a bit of Excel to take in. And thank you for being a good audience, and we will see you next lesson.
That was question 4B. So taxation of a limited company. How we tax a limited company. We did partnership, and now we are on a limited company. Okay, so we've been told that Bright Deco Limited is a company engaged in furniture and fitting making, both for local and export market. The company provided the following statement of profit and loss for the year ended 31st December 2022. So we have the first item, we have sales, a figure of 95,000, opening stock, a figure of 6 million, rounded to 1,000, that's 6,000. We have purchases, a figure of 40,000. Then we have the closing inventory, a figure of 10 million, rounded to 1,000, that is 10,000. So we have the cost of goods sold as 36 million, and gross profit is 59 million. Is gross profit taxable income or a non-taxable income? That should be a taxable income. Other incomes, we have interest from Bestway Bank. The figure is gross, that is 1,800,000, rounded to 1,000. That should be 1,800. Is that taxable or non-taxable? Remember, that is an investment income. So to get the business income, we are going to less altogether. We say that in interest from Bestway Bank, that is an investment income. So that is not a business income. However, when we are adding the other income, we are going to less it. However, when we are adding other incomes, we are going to add it. Sawa Josephine and Chepchumba. I hope, Ambuche, you are also with me. So say that interest from Bestway Bank, that is a non-taxable income, that is a non-business income. We are going to less it to get the taxable adjusted business income. Then we add it because it's an investment income that is subjected to further taxation. Then we have insurance recovery, and on that recovery we have pickup. Is that taxable or non-taxable? That is non-taxable because that is recovery on a capital expenditure. That is a recovery on a capital expenditure. Together, that is a recovery on a capital expenditure. Then we have the next is profit from the sale of marketable security. Profit from the sale of marketable security. Is that taxable or non-taxable? Not everything is taxable, Chepchumba.
Profit from the sale of marketable security, that is a non-taxable income. Non-taxable income. Read your notes, and I would love you to also read your note. Profit from marketable security, that is a non-taxable income. So profit from sales of marketable security, that is a non-taxable income. Then the next we have dividends from T Cooperative Society. The figure is net, a figure of 600,000. Profit from the sale of dividends from T Cooperative Society, is that taxable or a non-taxable income? When you talk about dividends from cooperative society, remember, number one, it's an investment income. It is an investment income. Dividends from cooperative society, it's an investment income. And this investment income is subjected to further taxation. Withholding tax is not final. If you read what we've been giving from day one, Chapchumba, you have not been going through your notes, and I'm noting that. So dividends from cooperative societies other than SACCOs is a non-qualifying dividend. For this particular business, we are going to less it to get the adjusted business income. However, we are going to add it on other income, because dividends from cooperative societies other than SACCOs is the withholding tax on them, which is 15%, is not final. They're still subjected to further taxation. So then we have the next type of income, that is the income from the sale of sawdust. Is that taxable or non-taxable income? That is taxable. Remember, this is furniture business. Some of the byproducts of furniture is sawdust. So the sawdust that you sell from furniture, then that is a taxable income. So that part for the income is sorted. Are we together? Is there anybody with a question? So we proceed to the expenses. So we say less expenses. Under expenses, the concept that we need to understand is the concept of allowable expense and non-allowable expenses. When you talk about allowable expenses, these are expenses that can basically be deducted against the taxable income. Then the non-allowable expenses, these expenses cannot be deducted against a taxable income. So number one is the finance charge. Is that allowable expense or a non-allowable expense? Finance charge. That is allowable expense. Asante Dennis. Number two is what you call insurance. Is insurance expense allowable or non-allowable? Insurance, that should be allowable. However, is subject to additional information. If additional information we are to be told that insurance relates to private, that insurance relates to the director, maybe private expense of the director, then that should be non-allowable. But as it stands, insurance, that should be allowable expense. Then you have NHIF contribution by staff. NHIF contribution, staff. How do you treat NHIF contributions? That should be allowable, asante. Then you have tangible assets written off. How do you treat tangible assets written off? Tangible assets written off, that should be non-allowable expense. Disallowable or non-allowable. There's one that we skipped, salaries and wages. We skipped salaries and wages. How do you treat salaries and wages? Salaries and wages should be allowable. So then we have, I've said, intangible assets written off, that is a non-allowable expense. Then you proceed to the next, what we call legal expenses. How do you treat legal expenses? Legal expenses can be allowable or non-allowable. So it depends on the additional information. Legal expense is non-allowable. Legal expenses can be allowable or non-allowable. Together, team. Dennis, what are you saying? If revenue in nature, then legal expenses are allowable. Are we together? That's why we say for legal expenses, that can be allowable or non-allowable. So that is subject to additional information. But if you do not have additional information, then legal expenses should be allowable. So then we go to bad debts. How do you treat bad debts? Specific is allowable, but provision, bad debts that relates to general bad debts, those should be non-allowable. However, specific is allowable. So if there's additional information, then we are told that this relates to estimated or general, then they should be non-allowable. So that is subject to additional information. However, if you have a bad debt and we do not have additional information, then we'll treat that as allowable. Together, team. So then we proceed to what we call repairs and maintenance. How do you treat repairs and maintenance? Is that allowable expense or non-allowable expense? So repairs and maintenance, that should be allowable expense. Then you have what you call next is floating expenses. How do you treat floating expenses? Expenses that you incur in order to list shares in the stock market for a limited company. How do you treat them? That should definitely be allowable. So expenses that you incur in order to float shares or to list shares in the stock market, that should be allowable. Then you talk about pickup scrapped in an accident. That should be non-allowable because it relates to the fixed asset altogether. So pickup scrapped in an accident, that should be non-allowable. Then you have the next, deposition. How do you treat deposition? That should be non-allowable. That is mentioned. Instead of deposition, we know that in taxation, we grant what we call investment allowance. So deposition is a non-allowable expense. Then we have donation to a local church. Donation to a local church, that will be non-allowable altogether. That the local churches are not normally registered as charitable. So that should be non-allowable or disallowable. Then the next is rate and licenses. Is that allowable or non-allowable? Then it does well, that is allowable. Then we have what we call travel directors' allowances. How do you treat directors' allowances? That should be allowable expense. Then we have traveling expenses. That should be allowable. Perfect. So then we go to pension to retired staff. How do you treat pension to retired staff? That should be allowable expense. Then we have entertainment. Entertainment, how do we go about entertainment? Allowable, unless it relates to private expenditure. Then we move to computer software purchase. Computer software purchase. So that should be non-allowable. Remember, computer is a capital expenditure. Purchase of a computer software is non-allowable. We claim investment allowance at the rate of 25%. Then we proceed to the last one, telephone expenses. How do you treat telephone expenses? That should be allowable unless there's additional information saying something contrary. So we proceed to the additional information. So number one, additional information, we are being told that directors' allowances. So when you look at the directors' allowances, include 1.2 million paid to defend one of the directors in a private legal suit. So on the item, directors' allowances, if you look at the directors' allowances, a figure of directors' allowances, if you look at that, directors' allowances, how much is it from the P&L? That should be a figure of 4 million. So 1.2 relates to private legal suit for a director. How do you treat that? 1.2 is non-allowable. We are going to add it back. So 1.2 should be non-allowable. So the 1.2 should be non-allowable. So then we proceed to the next. We have legal expense. If you look at that legal expense, a figure of 2 million comprised of the following. One is preparing a lease of 100 years. If you have a legal cost that you use to prepare a lease of 100 years, how would you go about it? That should be disallowable. If the lease is less than 99, how do you treat it? That one we are going to allow. Perfect. That should be allowable. If the lease is more than 99, then that should be disallowable as for this case. Then number two, we have collection of business debt. So legal costs that relate to customers and debtors, how do you treat it? How would you treat it? When you talk about a lease that is more than 99 years, when you have legal costs that we use to prepare a lease that is more than 99 years, then that should be allowable. However, if the lease is less than 99 years, then that legal cost should be allowable. So then we go to the next, collection of business debts. How do we treat legal cost in collection of business debt? Legal costs in relation to customers and debtors, that should be allowable. Then the second last, defense against claims of breach of trade agreements. Defense against claims of breach of trade agreements. How do you go about those ones? Claims. When you have claims against, sure. Somebody claims of breach. So when you talk about claims of breach, that should be allowable. There's a difference between contracts and agreements. So claims of this breach, that should be allowable. If you look at the last sitting, that was August 2024, claims of breach also came when you talk about alleged breach of agreement, trade agreements. When you hear about trade agreements, those should be allowable. Then we have the last one on legal fees. We have purchase of directors' private residence. Purchase of directors' private residence. Yes, non-allowable. If they're in the P&L, you add them back. So we have purchase of directors' private residence. That should be non-allowable. So if you have a legal fee that you incur to purchase a director's private residence does not relate to the activities of the bride decor. So private residence, that should be a non-allowable expense. So I proceed to the next, that is additional information number 3. 40% of the of entertainment expense relate to one of the director's entertainment. 40% of entertainment expense relate to one of the director's entertainment while on a family holiday in Paris. How do you treat that? While on a holiday in Paris. So I can call it working one. I can just call it working one. That is on entertainment. Entertainment. So we're told that 40%. What is 40%? What is the figure for entertainment? That should be 1100. So what should be 40%? That should be for 40. That should be for 40. So this is private. So private, this is non-allowable. So non-allowable. So perfect. So tuko on that. So then we proceed to the next. We have inventory. Inventories were valued at 10% below the cost price. Inventory were valued, so that we call it working two. Working two. Undervalue of opening stock and closing stock. Undervalue of opening stock and closing stocks. Undervalue of the opening stock and closing stock. Together, team. Undervalue of the opening stock and the closing stock. So we start with the opening stock. What is the figure for the opening stock? The figure for the opening stock? Give me the figure for the opening stock. So opening stock, if you look at that, that is 6. So when you're told that we're undervalued by 10%, when you're told undervalued by 10%, it means that 6,000 was basically at 90% together. If it was undervalued at 10%, it basically implies that 6,000 was basically at 90%. Tuko pamoja. So what is the undervalue? The undervalue is 10%. Undervalue. What is it equivalent at? So we say 10% over 90 times 6,000. What is the undervalue? If an opening stock is basically undervalued, what happens? If you have, what does it do to the GP if the opening stock is undervalued? Is undervalued? So what is the correction if it does that to the GP? We deduct. So we know that number 1, GP is going to increase. That is the gross profit if you undervalue. So the correction is basically to deduct. We are going to deduct. I have the figure for the closing stock. The closing stock figure is 10. The closing stock figure that is undervalued is 10. So 10,000 represents 90% because it's undervalued. So what about the undervalue, which is 10%? This, remember, is undervalue. So what is this undervalue? That should be 10 over 90, then times 10,000. So what is the figure? So get for me that undervalue. What is the figure? What is the figure? So that is 1. So what happens when we undervalue the closing stock? What does it do to the GP when we undervalue the closing stock? What does it do to the GP? So GP decreased. So what is the correction when you undervalue the closing stock? The correction is that we add back. The correction is basically that we add back. So then the next additional information, we are being told that the cost of floating shares were in respect to the private placement. Why in respect to the private placement? Where 30% of shares were sold. Number one, understand that 30% represents this flotation, which is 1.4. So, but we're being told something about this flotation, that it relates to a private flotation. So when you're told that it relates to private flotation, is it allowable or non-allowable? So we're saying that the flotation shares, a figure of 1.4, relate to what you call a private placement. What you call private placement. So that private placement is a non-allowable altogether. So the flotation, in this case, because of flotation, the word private placement, that makes it what you call a non-allowable expense. That makes it a non-allowable expense. So then we move to the next, capital allowances. Capital allowances were agreed at 2 million. No investment allowances were claimed in respect to the software. So we need to, when you're told that there's a working 4, we can call it working, we have it as a working 3. So capital allowance was agreed as a figure of 2 million. However, we do not claim for the computer software. So we can get for the computer software, we call it computer software. So we know that what is the rate? Investment allowance for the computer. What is the rate? What is the rate? What is the rate? 25. So you get the 25% times, what was the computer software? Computer software was 300. So what is the figure for that? Give me the figure for that. So that we are going to add that. Apart from 2,000, there's a 75 that was not claimed. We claimed the others, but 75 was not basically claimed. Perfect. So then we have the last one. Bad debt include, bad debt, on that bad debt, it includes an estimated default of 80,000. How do you treat estimated default? How do you treat estimated default? We treat estimated default as a non-allowable because it's based on provision. So the estimated default, we basically say that the estimated default, estimated default of 80,000 is what you call non-allowable because it's based on estimation. So that is disallowable. Is that sorted as we start this question? Is that sorted? If we are sorted, we respond with yes. Perfect. So we're being told the first thing, compute the taxable profit or loss for Bright Deco for the year ended 31st December 2022. So we say the Bright Deco Limited, Bright Deco, taxable profit or loss for 2022. So we have that. Then you say that profit, we start with which method are we going to use in this particular question? So then we go to profit provided. Profit, we just say accounting profit provided. What is accounting profit basically that is provided in this particular question? How much is it? How much is that? So that is 19. So we have 19, we have a figure of 19,800,000. So that is, then we say we add back. What do we add back? Very sensitive. We need to know that we're adding back what you call non-allowable expenses in P&L, non-allowable expenses in the P&L, comma, and you say taxable income not in P&L. So we had non-allowable expenses in the P&L and taxable income in the P&L. And the good thing is that we have analyzed the question. If you look at these expenses, we have the first one, intangible. We call it intangible assets written off. How much was that intangible assets written off? You give Molimo because we've analyzed. That should be 114. And then we have the next, what you call private flotation expenses. So that all flotation expenses should be non-allowable. Private flotation of expenses, that should be 1,800, 400. We also have pickup scrapped in an accident. Pickup. We have analyzed all these things, scrapped in an accident. How much is that? Pickup scrapped in an accident. So that should be a figure. Now that makes sense if all of. So we have the next is depreciation. Depreciation. What is the figure for the depreciation? Depreciation should be 34. Depreciation is 34. What about donation to local church? We have donation to local church. Donation to local church in Ngapi. The figure for donation, we say that is non-allowable. So as we rotate the camera to this other side, still on the non-allowable, donation to the local church. On that item, we also have the next is computer software purchase. Computer software purchase. So that was 300, non-allowable. So additional information, on that we do not have. Additional, we say private legal suit. Additional information 1, private legal suit. Legal suit for director. The figure, how much was private legal suit for the director? The bigger work has been done, and that is analyzing that private legal suit. So that was additional information number 1. Then we have additional information number 2. We had preparing lease of 100 years. Lease of 100 years. Preparing the lease of 100 years. That should be 800. Then you had the last one, purchase of director's private residence. Purchase. The other ones will allow purchase of director's private residence. That should be 200. Private entertainment. So remember, it was 40%. That was for 40. That was private entertainment. Then we had the next, what you call, what you should add back is closing stock understated. We said that the closing stock understated. What is the closing stock understated? So that is 1. That's okay. Then we go to estimated default. What you call estimated default in bad debt. Bad debt. That should be 80. So get for me what you're adding back. Sum it for me. 13, perfect. So we have 13, 131. Then you say we're less, non-taxable, operating incomes in P&L, comma, investment incomes in P&L, comma, allowable, what you call allowable expenses